What is up, guys? Welcome back to Bitcoin Audible. I am Jeff Swann, the guy who has read more about Bitcoin than anybody else you know. And this is the Roundtable. This is Roundtable number 11, actually. We got the whole crew together. A lot to go over this month in news. And if you don't know the Roundtable, this is where we get some battle-hardened Bitcoiners together to give their perspective on the news, on what's in development, and looking at it through the lens of a few guys who have been around the blocks, pun intended. You know, collectively between us, we have like half a century worth of time in Bitcoin. And that's the way I think it makes sense to say it. We have seen changes in the social perception and the narratives, the political battle, the infighting, the soft forks and the hard forks, the block size wars. We are the wise elders of Bitcoin, and we want to bring that wisdom to you. Or maybe we're just some self-important Bitcoin junkies who like to talk about crap and have very strong opinions about things. You know, potato, potato. But either way, you're in the wrong place and you're going to love it. Real quick, this show is brought to you by Ledn.io, Ledn.io. So if you need access to fiat, but you do not want to get rid of your Bitcoin, you can get a Bitcoin-backed loan. Ledn makes this stupid simple. It's a great way to avoid taxes on capital gains, especially if you know the time span you're going to need it. Ledn has proof of reserves, so you can check your Bitcoin balance and know that they're not rehypothecating it. They have survived a chaotic and long bear market with just the right amount of boring consistency that you're looking for. And obviously, make sure you read the fine print. Don't overextend yourself. Bitcoin is volatile. It's going to be volatile for quite some time. But if you need access to fiat and you just don't want to let go of Bitcoin, this is an irreplaceable tool in the Bitcoin toolkit. Check it out at Ledn.io. We are also brought to you by PubKey. And instead of reinventing the wheel to fix the web, it's actually about like, how do we use all of the things that we already have, all of the building blocks that are already well established to create a new experience for the web that is sovereign, that is censorship resistant, and where you have control over your experience and your network. That is PubKey. PubKey is demonstrating what's possible. Check it out. There's invite code as well as my PubKey, so you can go up there and you can like follow me or, you know, give me a shout out when you start playing with it. Now, for those in Bitcoin, the legacy media does not cover the real news. If you're looking for news on where true freedom and autonomy are being threatened by governments, by corporations, and importantly, the tools that actually protect it, not the political facade or the narrative of the day, but like what's actually at threat, what are the major news items, and what are the tools to actually protect people. The Financial Freedom Report is that resource. Literally, you will get 10 times as much useful information from just spending a few minutes on the Freedom Report every week than if you watched all of legacy media for all week in every major channel. And lastly, the lights in our society have not actually been built for humans. And we are now realizing that it causes way more damage and imbalance to our hormones than we had given it credit for. Chroma is redesigning light for the human body and human health. I've got a number of their products and I've gotten really serious about my light health, and it's actually made a substantial difference. And I got a 10% discount for you guys. The link and details are right in the show notes. And I only recommend sources that I actually love, products that I actually use. So if you haven't checked out all of these products and services, they are great things to keep in your back pocket. Go check them out now or just save the links for later. All the details will be right down in the show notes. And with that, it is time for the Roundtable. We dig into a ton of stuff on this show. We've got all about the politics of this era or this cycle, the Bitcoin Treasury phenomenon and how doesn't look like it's quite working out like initially thought. And we dig a little bit into the failures of Lightning and what the medium of exchange era as we kind of move into it might actually look like. Some major news items in quantum breakthroughs with Shor's algorithm, and we get into what that means with our resident physicist, and why no cycles are really different, but why this cycle is really different. You're going to love this one, so let's go ahead and dive in. Delay no longer. We have Bitcoin mechanic Simple Steve, my brother Jeff, and myself. This is Guys Roundtable. Welcome back to the Roundtable. This is number 11, which funny, we actually missed one. So this is technically 1 year. We've been doing this for a whole year.
Oh.
How fucking nuts is that?
Wow. Time flies.
There's actually a bunch of interesting news, but Steve, there's actually something I actually wanted you to bring up, that little thread that we talked about in the Raleigh meetup crew, because just about the quantum stuff, because there's actually an element of quantum. There's a bit of quantum news, and I was digging a little bit into it, and there's actually a kind of a almost funny element of the news item that I thought was like, how do people not realize that? I mean, of course, it doesn't mean that that it's nothing, but we'll get into it. We'll get into it in just a minute. I don't want to go all full on quantum, but kind of the first thing I wanted to dig into was this cycle, because we've all been through a lot of these now. You know, we've this crew's been in Bitcoin for a long freaking time, and this cycle feels different so far. It's not. There's not really been much hype. There's not really been. It's just kind of been like this normal stair step thing. And I was just curious y'all's thoughts on where we are, what kind of how you're thinking about where this potential cycle will go. And not like a price prediction or whatever. I just mean like in the context of like how it's likely to play out, and kind of how y'all think about the fact that it's behaved very differently than previous cycles.
Well, I'm always too bullish, but
Me too.
I think we probably will get the some overzealous, buying at some point. But it feels more like a bear market because when there's a whole bunch of announcements for things that are like about to happen. It's like in the bear markets, we usually get all of the positive building and, whatever. And Square being about to like starting to roll out support for Bitcoin payments and stuff at their point of sale, terminals or whatever. And banks being able to hold Bitcoin, which is weird. They've announced that like 2 or 3 times, but it's like they announced it when they passed it maybe, and now it's like maybe it's actually happening, like rolling out. And so I feel like there's a whole lot of groundwork set up so that Bitcoin's gonna be in people's faces a lot more, and people are gonna be like, oh, that thing's not dead or whatever, and maybe we'll see, maybe we'll get a hype cycle out of that. But I don't know, it's just kind of slow. Like I wonder if some of the slowness is related to the fact that a lot of Bitcoiners are living off their Bitcoin now. And so the churn, like even though there's lots more people competing for buying and mining and everything else, maybe there's less being mined and there's lots more people, competing to buy. There's enough like people spending or whatever that there's just a more churn than there has been in the past. There's more that's turning over. But I don't know.
Yeah, I mean, I agree with that. I think it just comes down to the seriousness of who is owning the stuff. Like, in 2021, a lot of the purchasing was done by like unserious, stupid people, and that's easy come, easy go, because those people come in quick, and then the first sign of wobbliness they go, and that cascades downwards just as aggressively as it went up. So I don't really know how serious the current buyers are. That's not to say they're unserious. Presumably a lot of the buying is the paper Bitcoin. I like Bitcoin, buy my stock. All this sort of, that's characterized this wave a lot. There's always something new. And it's, the reason it like tanks every 4 years but doesn't go to zero is because there's just these people that will buy and hodl and just absolutely never compromise on that. But they're always a small percentage, but that small percentage is reflected in how far the price falls. So what's the nature of the buyer? Like, is anyone doing any sort of hocus pocus on chain analysis to see who is buying what? Because if it's all just people buying Bitcoin treasury companies and stuff, that to me feels pretty. Those people aren't here for the long haul. That's a flash in the pan, I think, and it's another. That would be the bubble that pops and makes this cycle end, in my estimation.
I think that's actually part of what makes me think this cycle hasn't even really kicked off much. Is there's tons of announcements of Bitcoin treasury companies, but there's not nearly the liquidity to actually like pump up all of these companies just on like buying more Bitcoin. Like they're not even keeping up with the Bitcoin price. Like MicroStrategy is kind of like the premier, like, oh, I'm buying a stock because they buy Bitcoin.
Mm-hmm.
And everybody wants to do that. But in fact, that's actually like one of the news items is it says over half of Bitcoin treasury companies lost more than 50% of the value in their stock in 2025. The median drop is 52.4% loss.
Holy. Yeah,
Um,
it's stupid. I think it's a stupid thing to do because they have the financial engineering to magic money out of nowhere. I get that that's a hack that is valid, but at the same time, the execs of these companies have to take home some cash, right? They have to get paid, and they're not going to do what they do for free. So, in my opinion, it's going to end up being a net negative for the naive investor that could have just bought Bitcoin. Like, there's no one you've got to fund that. You don't have to buy a private jet and for a bunch of executives, when you buy Bitcoin, that's not part of the Bitcoin price. You just buy it.
yeah. Um, what it makes me think is that if it's not even keeping up, if it's suggesting, and we've kind of seen this with MicroStrategy anyway, that yes, it grows higher on the high side, but it also dips lower on the low side. That it's basically, it just increases volatility of the actual Bitcoin price. Like I think it actually probably will pay off in kind of the heat of this cycle, because their whole goal is just to stack more Bitcoin, and the idea of the company is to basically do a speculative tack on fiat. So if they don't leverage too much on, like if they actually do smart leverage on the fiat side, then the CAGR, like just normal, Bitcoin annual return will basically work out in their favor. Like, so it's a question of how stupid are they in setting up their structure that
Yeah.
can they survive a bear market or not, you know? But I suspect a lot will. Actually, there will be some that are just stupid, and there will be some that behave like shitcoins, and they just they, like you said, they'll get a private jet, and like, we have a super successful company, and like we're a Bitcoin treasury company, and they'll just waste money because of quote unquote success, and then it will hit them twice as hard when the price dips 10% and their stock drops 35. But in general, I actually don't think the uh, the concept is literally just a fiat speculative attack. Like it's a question of whether or not the people actually know what the hell they're doing who are getting into it, and whether they're actually going to make sound decisions. Um, but it makes me think that there's this recognition of kind of a flood starting, like this tide coming in, but that the tide is still further out than everybody anticipating it by quite a bit right now, and everybody's trying to stay ahead of it. Everybody's like, oh no, we need to do this, and oh no, my god, we need to do this, we need to do this. It just makes me think that this could be like a really really ridiculous one, and not just psychotic on the upside, but also just like bloody with why what happens that kind of turns us over, you know. um because there's just going to be a lot of really big players in this time, like PNC Bank, the bank that I use, which I'm taking credit for this unless somebody tells me otherwise. You got to prove a negative, and that makes perfect logical sense. But I have been convincing my local bank manager for years that Bitcoin is great. And every time I go in and talk to them to do like a wire or whatever, they see like, some chunk of money go into my account and then it goes out. Like I'm probably the most bizarre use of a bank account as they've ever seen, because I've been on Bitcoin Standard long enough. And every single time I go in and they're like, "Guy, hey, how's that Bitcoin thing doing?" And like I've always asked them about whether or not they're going to accept it and all this stuff. And she's like, "Well, I've brought it up with people and, we've talked about it, but PNC had a bad history with Plaid and they like try to partner with them for something. And then like Plaid like illegally used their like stuff and said that they were in agreement that they weren't in. And like Plaid was like that connection tool that's like even Strike uses them or whatever, but it's like between a bunch of crypto stuff. So there was actually an indication for a while that like PNC didn't want anything to do with it. But straight up, while I was in the bank the other day talking to the manager again, like literally at the exact time, it was like 10:23 in the morning, an announcement came through that PNC has partnered with of all they did not listen to me very hard. But with Coinbase to offer Bitcoin and cryptocurrency services to wealth management clients so that they can custody and purchase. I think in the coming probably a couple of months, I'm going to see advertisements for Bitcoin when I walk into PNC Bank. That's going to be a really different environment. Because every time it comes back up with somebody, like I was just speaking to real estate agent actually a couple days ago, and mentioned Bitcoin, and she's like, "Oh, is that Bitcoin thing? I really need to get up with the times. I've haven't I don't know. It's just one of those things that I've just never gotten into, but I've been thinking about it more and more. And the fact that you bring it up just makes me think I really probably should figure this thing out now at this point. But I get a lot of that kind of response now, is people who feel like it's kind of time to pay attention to it, and they no longer think it's like, I don't get this immediate rejection. And for the most of the time that I've been in Bitcoin, it's been an immediate rejection or an awkward face. Like, oh,
I agree, man.
You talk about that.
Like I've been with my girl since 2018. We've been living in the same small town in Canada, and she started this thing called Bitcoin Valley, just to onboard everyone in our community and make it work, because of like getting businesses on board and stuff. And it's been a thing that I've been like, nah, man. Like I'm so sick of everyone just being like, what's that drug dealer money and stuff like that. I'm like, I've been dealing with this for like way more than a decade now. It's like, I'm so over trying to orange pill people and stuff. And she started doing it anyway. And like every single business in our town has been like, yeah, that sounds great. Let's do it. And I was like, what? And literally just like 1 minute ago, while you were talking,
we just have trauma. We all of us just have PTSD.
She just got out of the dentist, and like 1 minute ago, she just messaged me like they agreed to accept Bitcoin. I was like, what? I was ready to go and pay like $2,000 for a root canal with my credit card, and she's like, no, they'll take Bitcoin. I was like, are you still on the medicine, like on the thing? Like, you're joking, right? Like, so yeah, it's like for some reason. At some point, people have to be like, I heard about Bitcoin, I was interested and skeptical, and then it crashed, and my skepticism was justified. Then it did it again. Then it did it again. Then it did it again. Now I'm just going to have to obviously learn what this thing is, because it keeps going up. And like, I knew a guy that made $1 million and then did great back in 2015. Then I knew a guy that made $1 million and did great in 2017. Then I knew a guy that did great and made $1 million in 2021. Maybe I can do it this time. Like, I think, like, because like it's not just us that's been through the cycle. Everyone's been through the cycle, whether you owned any Bitcoin during it or not. People watched a thing happen.
You were aware of it. Like everybody is aware of it now. It's not an unheard of thing.
Yeah. And
It's
the idea that it's
interesting.
a flash in a pan is just not credible anymore.
Yeah.
It can't be. You can't have this thing that like someone you knew when you were a teenager was going on about it. Now he's 37 with 3 kids, like, and he's still talking about it. There's no way that's a thing you can carry on ignoring. So I think,
Yeah.
like it was going to happen at some point, and I think it's like I'm the first to be like, nah, it's not for normies. They'll never get it. But it doesn't really seem like it. It seems like actually people have finally reached a point where they're like, I'm just going to have to adopt this thing and understand it.
That's interesting. Steve, what are your thoughts on this cycle? You got any input?
Yeah, there was one of our customers at the bar that's been there for probably 5 years. Seen her like once a week out of nowhere. She was like, okay, I guess I finally need to learn about this Bitcoin stuff. My boss is telling me to do it. I think that's a little, yeah, I've heard that at a couple places. It does feel like they've been a little of what you guys said, like, okay, I'm not going to miss out again. And also a little about like, oh, BlackRock and all the Wall Street guys, they've given the green light. So I guess, most people are followers, like that, the INTJ is
They're waiting for
personality
somebody
type
else to give them
things, like,
permission. Yeah.
yeah, most people have just finally gotten permission to look into it. The other thing that I was thinking about recently, like I remember back when I was an idiot and had retirements and like 401ks and stuff like that before I drained them all. Like when I first started thinking about investing, I was like, what does large cap and small cap mean? Like cap, like hat, like what's cap? I had no idea what market capitalization was. And for some reason the other day when I was looking at one of those, like Bitcoin just surpassed Google or wherever we surpassed stock wise, and I was like, oh, Bitcoin's a large cap. Oh, so maybe there's just some of the also the Coinbase rehypothecation stuff. Sure, I mean, who knows about that? That could be like holding back everything. But maybe just the simple, like, yeah, we're a large cap stock now. Like we're not going to have the 10x in a year anymore. Like that's why you invest in small cap stocks, so you can get that stuff. I know that's the boring answer. Yeah, let's go with rehypothecation. Yeah, fuck Coinbase.
It frames it for like the typical normie, like through a normal or through a traditional lens, it looks like a more serious thing. And one of the interesting things though is that the interactions that I've had have been very, typically, like when I start having interactions or people start to entertainment for like, just like generally, I feel like we're further along in the cycle, is that it's basically already reaching the point where you shouldn't be, like where it already did a 2x, a 3x, or a 4x. And now everybody's like hitting me up and being like, hey, how do you get the Bitcoin thing? How do I do that? And I'm like, this probably isn't the best time. Like, why don't you just like take a breather and like sit for a minute and like learn about it, because we'll probably be back down to this price here in 4 or 5 months. And it's always kind of in this environment of FOMO of like, I gotta get in it now. Whereas all the reactions and kind of conversations I've been having recently are just people who, it's less about like FOMO of like, I gotta get into it and I just saw it triple in price and I need to buy some. And it's more about like this, like I'm resigned to realizing that I should learn about this. It's the same conversation that I have with AI. Is it like, I need to figure out how to use ChatGPT. I need to figure out how to, like, like,
that's what it feels like. They're like annoyed. They're like, fine.
Yeah.
I gotta learn about. My boss told me I had to learn about this now.
Exactly.
Jesus.
Yeah, that was like, yeah, it's like the truth will set you free, but first it will piss you off. Like that's Bitcoin.
And that's a very different type of mentality, I think.
Yeah.
And it's also why I really just kind of think, I really think this is just going to be super elongated. if you look at like compare it to last cycles, like we should peak in like 3 months and then crash, and beginning in 2026 we'll be in the shitter again. But I don't think so. I think we're going to stair step, and it's just going to stretch out like crazy.
I don't know. I think interest will, but interest and price are not perfectly correlated, right?
Sure.
Like one follows the other,
Sure.
and the other follows back. It's like, I think the people that are onboarding now are going to stay for the long haul, but they're also like a bunch of businesses adopting Bitcoin doesn't actually mean a much higher price suddenly. Like Square's thing doesn't either. Like, the positive developments have weird effects on the price. Like crushing capital gains tax would be amazing for Bitcoin, and at the same time probably mean quite a lot of dumping in effect. So like what there are all sorts of like things that wouldn't correlate the way you'd expect. And usually things like Square's announcement, if it had been a bigger deal, because it wasn't that big of a deal, maybe just because of the way they've rolled it out or because of the boy crying wolf before. But often those things are usually like the market dumps on those kinds of announcements rather than pumps, which is always really weird. But like, I will say that thing Tone always talks about, Tone Vase. He's like the best bit of market wisdom he ever gave me was like, when everyone is bullish, the price can only go down because everyone has exhausted all of their money buying out of exuberance. And when everyone is bearish, the price can only go up because then everyone that didn't want to buy it has sold, and that's why they're sharing their misery about having done so on social media. So it's literally like a seesaw. The minute it's at the bottom, the only way is when it can go up, and that's psychologically so crushing. But
that's true.
It's just the nature of the market. Like those people that thought, well, there was like a practical study they did where they just like gave people $100 in a spoof trading account and reversed the buy and sell button, and everyone makes money because they do literally follow your emotions and do like buy when you want to sell and sell when you want to buy, and all that shit. It's all that kind of stuff. I think we're gonna do all right, but there's going to be some horrible shakeouts. That's just part of what Bitcoin is. People aren't used to these kinds of markets that are open 24 hours a day. Like it's not a thing, that people are used to. This sort of the market opening and closing. Bitcoin's had been up for trading more longer than the S&P 500, right? Just because it did it 24 hours since it came around, and the S&P is closed, half the time. I don't even know how much.
Two-thirds of the time or more, even a little bit.
Yeah, and they get halted when anything violent happens. Bitcoin doesn't. Like Bitcoin will tank 50% in a day, man. Like more than that.
Bitcoin loves the violence.
Oh, it does, man. Nothing beats the COVID crash, March 12th, 2020. That was just unreal. Like it went from like 3 days prior to it, it was like 10 grand a coin. And then like it fell down to like 7 on the day, and then it dropped all the way down to 3,800 like in one day.
Dude, went down to 3.
Yeah, something like that.
Like it literally hit 3,000.
It was in the 3s.
Yeah, it was awful. But I bought loads that day because it was it was a no-brainer buy. I'm like, this is over the top.
We sold our second car because I was like, and we talk about that. Somebody even brought it up like a couple months ago in the audio knots. Like someone was like, "Hey, guy, you remember the fucking time we were hanging out in here and everybody was scrambling like crazy, and you sold your car because of Bitcoin price crashed from 10,000 to 3,000?" I was like, "Yes, I do." He's like, "Good times, man, good times."
Man, how much did you sell your car for?
Not much. It's like probably $3,000. Well, what was it? Well, Jeffrey? Didn't you actually sell it for me?
2 Bitcoins with your car.
2 Bitcoins? No. I think I got like 0.6 or 0.5 or something because it was going up while we were
and that's trying to
dump the car.
That's now worth.
I'm not. I'm probably not hurting from. I think it was a good decision. But
that's amazing, man.
You could buy like 12 of those cars now. Well, no, the price of cars is doubled, so you could buy 6 of them. I don't remember exactly what we sold it for, but we sold it pretty quick. I mean, it wasn't it went pretty well. So
Yeah. I remember I had a panic moment when that crash happened for like, I don't know, maybe 20 minutes, 30 minutes. Because, and I went Googling for like elliptic curve vulnerability, like, SHA-256. Like, I literally just went hunting for like, okay, fundamental. And I went to it wasn't mempool.space back then. It was probably at blockchain.info. But I was just like, I was trying to find anything. I was like, no blocks are coming in normal. Like, there's nothing wrong. There's not even a news item about any of this. Like, there was nothing. And like very quickly, my 20 minutes of like full panic of like, oh my God, what has happened to Bitcoin turned into like, oh my fucking God, this is the best buying opportunity in the whole, like, this is the best buying opportunity we're going to have for forever, because there's no reason for this. This is totally a liquidity or a margin call or, something like this is pure price action. And so that's when my wife actually came home that day, because this was actually the real kicker, because I got this in like 3 days. But she came home that day from work, and we had this like big like shelf thing, and the whole bottom row of it was basically a filing cabinet. She has like these really neat little things. We just had like all of our financial paperwork and stuff.
she organizes stuff so well.
Yeah, and I destroy it. I destroy it so well. I took everything out and I had like laid it out, like, those scenes in the movies where like, and like nobody would ever do this in real life because like it's so stupid. But like you just like somebody just lays out papers all over the floor. It's just like spread out, and it's like this scene for like a conspiracy scene, or like I'm putting the pieces together and I'm figuring out this puzzle. Well, basically that's what our living room looked like. And she walks into this, she says, "What the hell is going on?" And I was like, "The Bitcoin price has just plummeted, and I swear to God, I know I've got like some sort of money or a retirement or something somewhere in here, and I gotta find it." And sure enough, I did. I had a Fidelity account with like $1,400 in it from when I was an internet technician, and I cleared the whole thing out. I think I paid like $200 in fees or something like that, and put it into Bitcoin. So that in between that and the car, we did really great that day. That was, or during that like couple of weeks. That was a wonderful opportunity. Good days.
Yeah, you're when you mentioned there, like you checked the blockchain, the blocks were still coming in okay, and everything. I have the simplest possible investment thesis. Every morning I look at the state of the Bitcoin network and see like, are transactions coming through? What are the ages of coins spent yesterday? What's the mempool look like? And everything's fine. And so I buy more. Like I've never made an investment decision based on news in Bitcoin. 100% just the health of the network. That's all you have to do.
Well, you got to think about it. Like, it makes perfect sense to do that too, because at what point should we ever consider somebody in the news has any idea what the hell's going on in Bitcoin? I've never heard them say anything like sensibly coherent, or that just wasn't riddled with so many like false understandings or assumptions that just made no sense.
And I love this. There was a clip of Jack Mallers. He went on some god awful mainstream financial news thing, and like it was just after they listed the Bitcoin ETF, the first one, and like they were like exuberant about it. The banks were launching like every single scam coin ETF as well, because they were just like, "This is
we're gonna do this.
This is free money. Let's just do it." Like people, let's get our cut from the crypto enthusiasm. Let's just list everything. And Miles is just calling it like, how many of these pieces of crap can we list as ETFs? And like, and the anchor on the news show was clearly like an F head, and who just is so offended by it. He's like, "Well, I don't know if I would refer to these as pieces of crap." Like,
I cannot believe that you would do this on my show.
Well, but back to what Steve said, like the health of the network is, I find it usually inversely correlated. Like just 2017 was like the worst Like it ended up being something we won, but there was like vicious civil war going on in 2017, and we were ripping each other's throats out. And I thought we were going to lose, and the price was just flying up the whole time. I'm like, this is absurd, dude. And that's kind of how I feel at the moment, because we've spoken about the spam war and all that stuff. That's been, it's more than 2 years now, and it just doesn't look healthy to me at all. I'm still like, every week I have some new perspective on it, and I'm just like, wow, this is worse than I thought. And this, at the moment now, we've got this sub 1 sat per VByte summer thing that's kind of been memed into existence, where like a few mining pools, most of the major mining pools, as in, well, Ant Pool and all of their, sub Ant pools, are all mining less than 1 sat per VByte transactions.
Sub Ant pools.
Yeah. Well, they're, Ant Main, I call it, the sort of collective entity that is Ant Pool. But I mean, that all happened. Foundry and Via BTC are the only 2 major pools not participating in it. But unfortunately, like, I didn't really realize how this worked. A lot of people, even on the monetary maximalist side, which is my side, the people that just want the Bitcoin blockchain to be limited in use to just financial stuff, even those people were like in favor of sub 1 sat per VByte transactions, because they're like, look, if the blocks are half empty, why am I paying 1 sat per VByte? Why can't I pay less than that? Why are core nodes filtering this stuff out? But the trouble is that filter is linked to another filter, which is the dust filter. And we really don't want a whole bunch of, like, when someone wants to spam outputs, we want them to have 546 stats as the output, or whatever, depending on the nature of the transaction. It can be different than that. That number is derived from whatever the min relay is. So if you drop the min relay from, you must have 1 sat per VByte for your transaction. If you drop that to 0.1 sat or lower than that, then you drop significantly the dust filter as well. And the dust filter is really important, because the smaller the dust filter, the worse the UTXO bloat gets. And the UTXO bloat, as we all know, is one of the most expensive things about running a node, is having a bloated UTXO set. And that was the worst thing about inscriptions, of course, because they blew up the UTXO set from 4 gigabytes to 12 gigabytes, tripling it in a couple of years. That really sucked that happened. And it really is embarrassing for all the Taproot proponents like myself, because 89% of Taproot outputs are all spam inscription outputs, but at least they're at the dust limit. At least they're all 546 sats instead of 1 sat. And if they're all 1 sat, then these tens of millions of outputs, which adds up, if you can make them all 500 times cheaper, then you're going to do that. And
you're going to get 500 times as many of them.
Yeah, exactly. Yeah. Or, it just, that, and again, it just comes down to who is using the product Bitcoin Core, who is really going to run relays for these people that are being like told, well, if Bitcoin nodes don't relay cheap, if they don't relay everything that could be of financial interest to a miner to include in a block, they'll get routed around, and that's bad for the network. And I'm like, yeah, I get it, but at the end of the day, why would I do that? I'm not sitting here as someone running Bitcoin Core just so I can relay crap from spammers to miners that want to put it in a block. That's not why anyone would ever do this. It's not a paid thing. That's just, why would I do it? Like, what does your product offer me? The ability to be a free relay service for spammers that want to put crap in the chain? That's not compelling to me. I don't think I'm downloading that. And it's just sort of assumed, well, you're going to run it for other reasons, right? And then we spoke about that off camera, like the idea is you would run a node because you could verify your transactions, or you can just virtue signal by running a node. But it's a mismatch between the expectations of the people making the software and forgetting about incentives. I'm not going to run Bitcoin Core if I have to relay crap around. That's not, and if I'm told it's healthy for the network to do it, they say I can't make appeals to altruism when telling miners not to include junk in the chain. But why are we making a giant appeal to altruism of Bitcoiners to run nodes that help miners out and make their own transactions more expensive, or help them fill the chain with crap that makes it more expensive to store? That's why are the incentives never brought up when it comes to nodes? I guess that's been my question for months now. Like, what's my incentive to relay inscriptions? And they're like, well, if you don't do it, your fee estimation will be worse, and the block propagation will be worse. And this new PR, sorry, I'm rambling here, but the new PR from Robin Linus, the BitVM creator, to drop the min TX relay down from 1 sat per vbyte to smaller than that. He says he wants to increase the dust limit because he agrees with me that you don't want to drop the dust limit, but I don't think you can. And there hasn't really been that much discussion about how a dust limit is fundamentally, conceptually, not logically, but conceptually linked with whatever the min TX relay is. You can't really separate the two without making the dust filter not really a dust filter anymore. The amount of sats that constitute something being dust or less than that is a function of what the min TX relay fee is, because that signifies what a useful UTXO might be and what it might not be. So you can't separate the two conceptually. So trying to isolate them in the logic of the code I don't think it can be done. And that conversation is like just getting started, but maybe I'll round it off like this. I'm really sorry how long I've gone off on here, but I think what really happened, I had a conversation with Chris Guida, who's a Lightning developer, and he characterized the whole spam debate in a way I hadn't really considered before. But it all started with mempool full RBF, where core were not having that enabled by default. And everyone wants full RBF. Why would you not want full RBF? Like, it's just a hassle when it's not there. I don't want to have to use child pays for parent because RBF is disabled by default. And unless I flag my transaction to have it in the first place, I can't RBF it. That was always annoying. But Core never did anything about that. So Peter Todd went around Core and started making mining pools that turn it on anyway, and then try and get that stuff to them anyway, and bypassed the Core filters. And since then, it's gone on this power trip where it's like, well, it doesn't matter what Core do with their filters. We can just bypass them and bully them. And Core have been like, you know what? You're right. You can do that. We are irrelevant. We cannot do anything about spam. And the whole fight with me and Core has just been me saying, you're not irrelevant. You actually have a lot of influence here. And them saying, no, we're useless. We are definitely useless. And I'm saying, no, you're not. You're definitely not useless. It's been the strangest fight ever. And the precedent set with mempool full RBF was a nasty one, because now whenever you talk about, hey, look, whatever the default filters are in Bitcoin Core, they have a massive influence over what ends up in the blockchain and what doesn't. And op return is such a good example of that. Like, more than 99% of op returns respect your core filters. And they're like, look, man, we don't accept that they have any relevance to anything anymore because of mempool full RBF. That is the elephant in the room. And I hadn't really realized it until now. So, end of rant.
End rant. Super Testnet was actually talking about it. He came on the show and he was talking about an example of somebody who wrote this whole story, like this, like tons of paragraphs of like how she got a much bigger op return into the chain than was allowed. But she actually did it through like a bunch of different transactions rather than like, so she ended up being within the op return limit, as I understand it.
Yeah, she didn't make a giant op return. She just did them all 80 bytes or less.
Yes. And he was like showing like, she even explained like, okay, first I just went, it's like, okay, how do I do this in the wallet? And there wasn't like an obvious way to do it in the wallet. She couldn't just do it. And so she ended up like just kind of going on this little journey of investigating and then explaining how it all happened. He said, and it was just a perfect example of how it works, is that like, there wasn't just like an obvious, any one click, anything. Like, she had to go hunt, like she had to do a lot of work to figure out how to get this entire message into the chain. And that's all you want. That's all you need. You just need a barrier so that if you're trying to abuse it, it takes more and costs more than it does if you're not. That's exactly how it works. That all you need is a marginal cost for people who are using it in a undesirable way, or in a way that makes them like a poor steward of the system. And I think one of the disconnects is that developers don't have sober idea of what it's like to be like an everyday, like just a user.
That's my main contention here.
The developers are just,
That's
they have a
definitely true.
developer's perspective. And I run into this all the time with
Me
ParaDrive,
too.
is I try to explain, like, listen, look, it's a pain in the dick to share files. Like, I don't think you understand how big of a problem it is. And then people will literally tell me, it's like, dude, just set up an FTP server. And I'm like, dude.
Hey, in fairness, this is like you
Dude.
guys in Lightning nodes, though. You guys are the same way with Lightning nodes. Like the regular person, you guys are regular person can set up a Bitcoin node like this, and you guys are like, it's so easy to set up a Lightning node. It is.
No,
There's
it
no
ain't.
way
I've never said
any
that.
regular person
I
will
never
ever
said
set up
that.
a Lightning node.
I
I said you can use Lightning. Phoenix makes it easy.
No, it doesn't. I showed you a video of my Phoenix wallet failing trying to pay your invoice.
Really?
I'm so tired of people
Really?
telling me Lightning is easy. I send them a video of the exact thing they show me failing.
Yeah,
And then they're
dude.
like, oh, well, you just got to do this, that, and that. I'm just like, will you just admit it doesn't work?
Yeah.
Tell me what to do. I'll send you the video of
I've
it
actually never
failing,
had a problem with
and you
Phoenix.
have to admit it.
And I have onboarded normal people into Phoenix. The only time in which it was weird is like my in-laws had their channel closed because they didn't use the wallet app for like
Yeah,
5 months or something, and they had to,
That's
they
not okay.
texted me like, hey, I don't want to lose anything. Is there anything that I have to do? And I was like, yeah, it's just on chain now. We'll sort it out. But in the
Yeah.
general use, like just receiving a transaction and then sending it, the overwhelming majority of the time it just works. There are not many of those out there.
not me.
There are not
me.
many of those out there.
Lightning is
Okay.
just, it doesn't.
I think you haven't
optimize
talked to
well.
regular people.
I think you're right. Like this week, I needed a ClearNet LND,
But it's
and I
a good
tried to set
example
it
either
up.
way. Yeah.
I tried to set up a ClearNet LND this week. I fought with it for like 4 or 5 hours and couldn't get it to work. Like I could get it to start, but it, some sort of cert stuff just wasn't checking out. So LN Cli couldn't talk to LND, and I was just like, if I can't set this up, then it's obviously not within the reach of
Nobody
like,
else is
normies.
going to.
Same with Core Lightning. Like Jason I was with him a couple of months ago. He was trying to set up a Core Lightning node, and he ended up having to manually get someone else's gossip and pay,
Oh my God.
copy the gossip stuff into his directory under his
Oh
Core
my
Lightning, and that
God.
managed to make it work. It just wouldn't
Wow.
sync up any other way. Core Lightning to me feels like abandonware at this point, and LND feels like it's there, but genuinely it's just such a mess. Vincenzo is always telling me Async or Async, the company that makes Phoenix, is where it's at, and that's like the most well done stuff. Allbee Hub is supposed to be like really good. A lot of people will sing the praises of Allbee Hub, and
It's still it's for technical people. I mean, I love.
There's always a new one that works. Okay. There's
Yeah.
always one that you can switch to this week and it will work. And then 6 months later, or even a month later, it won't work because they changed their liquidity stuff. And like now you have to do this or now you have to do that. Like, even if you say hey, this one worked, will you put $10,000 that this thing will still work in 6 months when I open it again? Like, no, you won't do that. So like, let's stop pretending like it works. Like it doesn't. I mean, I love it. I love Lightning. I'm just so sick. I am just so sick of people at the bar telling me to start accepting Lightning at the bar. Like, I have tried so many times and I have had hundreds of people just simply fail. Like it just doesn't work.
well, the trouble is like you're using Tor for a lot of it, and Tor barely works.
I was about to say
as it
Tor
is.
sucks. Tor
And,
sucks.
Like it's not. Lightning never fundamentally optimized for reliability. It optimized for being cheap and for being fast, but that doesn't mean always working.
Works.
Right? Bitcoin always works. Like if you pay a high transaction fee and you send to a Bitcoin address, that money is going to end up at that Bitcoin address. There's just nothing you can do to stop it.
I like the trade-off that Aqua makes because it has taken almost 2 minutes for me to make like which if you're in a retail transaction, that can be, a pain in the ass. But that's the maximum it could possibly take because you have to make a liquid transaction for the lightning swap to happen in the background. But usually it's very fast. It's pretty quick, and so having a liquid balance, which is just as stable as a Bitcoin balance, generally speaking, having them fulfill the lightning payment on the other end has been a very very reliable, especially with my more intermittent use of lightning and Bitcoin. It just, every time I come back to it, it works exactly the same. So now Aqua has their newest update, like their wallet has been great for like a few months now. It was early on, there were some bugs, and if you wanted to send like the whole amount or something, it wouldn't like pull the transaction fee out or something. It had some weird quirks that needed to be fixed, but it seems to be mostly like everything seems to work now. So
Yeah, the only ones that I will literally ever recommend to people, and I like Aqua. The one thing about Aqua is just the fees are a little bit higher because you're doing a swap. But the only ones that I have ever found like reliable, that if you just put something on Lightning, it tends to just work, are Phoenix, Breeze, which now they have Misty Breeze. And it's been working great for me. BitKit and Aqua. Like, they're the only ones that just seem to, like, when I put stuff and I expect it to work a certain way on mobile, almost everything else on mobile is a pain. But I will say, I will give a shout out to Alby Hub, even though it's far more technical than, like, I would never get my sister. Like, my sister-in-law, I have her on Phoenix, or any of the 4 wallets that I just mentioned. Generally, I'll put them on that, and it works when we're messing around. Granted, I'm usually using Phoenix with them or whatever.
We'll
so
check
I'm sure
your list in 6 months, and you'll have.
We'll check it in 6 months and see. We'll be doing this in 6 months.
Before we get too far away from that dust limit conversation, can I give a little comment? I think I might have an idea here that might kind of be a middle ground in the dust limit conversation. So one thing I think people aren't thinking deeply enough is, like, why is the dust limit set at what it's set at? Like, why was that chosen? And not just like, oh, it's just, the number of bytes times 1 Satoshi. Why was 1 Satoshi chosen? And I think the deeper, like, reason for dust limit is something like DDoS protection.
Yep.
Like, you're keeping somebody from spamming the network. And also something about, like, make it so that, like, you can get a reasonable amount of purchasing power afterwards. Like, you but all of the, like, the deep fundamental things about the dust limit are about purchasing power. And so, like, all these people are having conversations about the dust limit without thinking about, like, what's 1 Bitcoin worth in purchasing power. If 1 Bitcoin was worth $100 billion, it would be ridiculous to have the dust limit where it's at. Also, I agree with you, Mechanic, that, like, right now setting the dust limit at, like, less than a penny or whatever is ridiculous, because you're going to get a bunch of, like, UTXO bloat. But, like, when you look at the trend at what people want to spend, like, what's the median UTXO amount spent, it's trending down like crazy. And so it's like, so I think the dust limit should be a function of purchasing power. And I know, like, the UTX Oracle
problem.
Well, yeah, I know the UTX Oracle stuff is, like, probably too much to, like, put into core now, but you can do something even simpler. If you just look at the median output amount, the correlation of the median output amount with price since 2015 has been, like, almost perfect. You can almost predict the price on, like, a weekly or monthly averaging time just looking at median output amount.
Isn't the median output 546 sats?
No, that not the dust limit. Just like so if you look at all Bitcoin transactions and you're just like, what?
I'm with you. I'm saying there are so many outputs at the exact dust limit that surely the median would be just that.
No, so I've been studying this in depth for the past week. I've been posting charts about, like, look how closely the median output and the price are correlated. They're, like, exactly the same if you average over, like, a weekly or monthly thing. So, like, I think we should consider making the dust limit a function of a median output over, like, a long enough time period where nobody can game it, like a month or 6 months or something like that. Because I think that will, like, naturally lower the dust limit, like, over a function of decades or something. Don't like drop it immediately. Just make it like naturally drop based on the purchasing power of Bitcoin, which is based on what people want to spend. I mean, like, I don't think we want to get to a point where we're telling, like, so, 100,000 people around the world every day want to make a Bitcoin transaction for $100. Do we really want to get to the point where we're like, no, you can't use Bitcoin like that because there's a dust limit? Like, no, the dust limit should be a function of the purchasing power, which is going to be downstream of how people typically want to use Bitcoin.
But I agree with that's obviously true, but at the same time, it seems clearly impractical as well. Like, this is sort of the flip side of the block size limit. It's that again. Like, I really don't want people to be priced out of using the L1 block space, but we know that it's super limited, and we know that you're going to get outbid when Bitcoin is sufficiently adopted and there's enough L1 usage that you can't buy your coffee on chain anymore or whatever. That this is just another consequence of us only having so many resources.
Right, but that'll be fine if people start using Bitcoin to settle larger amounts, but people aren't doing that. People have the average, I mean, like, Bitcoin is used to settle $100 amounts consistently. That hasn't changed.
That's a good point, and it's a very practical thing to keep in mind. But at the same time, it's just going to remain true that we're not going to be able to accommodate. There's no way really to open this stuff up without making it easier to abuse nodes. Like, it's the incentives don't line up. Like, there is the incentive you're pointing out, which is to be able to do something that's realistically, a small purchase, but a real purchase that, if with another 10x in price, becomes something that is way below the dust limit. I get that. I understand the incentive to change it for that, but it does come off with the trade-off that makes it so that, I can fill up your mempool with trash more easily and like bully all of the other transactions out of it, because the default is 450 megabytes or 300 megabytes for the amount of stuff you'll hold in your mempool. And if you I think you can just blast it full of transactions at 0.1 sat per vbyte. If the min TX relay feed gets dropped, you can blast it. But I think,
but if Bitcoin's $1 billion, 0.1 sat's a lot.
That's true, but I mean, $1 billion at the same time, that kind of implies that $1 billion won't even buy you a house at that point either. Like,
just exaggerated for the sake of explaining the
in today's purchasing power. But I don't Bitcoin with insane purchasing power, like the network's worth like 50 trillion or something like that in today's money. Like, I don't know how you can accommodate that with stuff like making nodes more permissive of small stuff and making it easier to generate more spam outputs and stuff. I don't think we can win. It's just trade-off after trade-off. I don't think you get into a place where you're like, yeah, we can unequivocally tweak a variable and make things better for everyone without someone bearing the brunt of it.
I thought I was proposing a middle ground here. Apparently not.
Well, because like we are at the middle ground. That's the point, because you can raise it or lower it or leave it where it is. That's
you make it a function of something deterministic. Don't make it a human, like, it's raised based because a lot of people want to raise it. A lot of people want to lower it. Like, don't do that. Make it a function of something that is a property of like how people have been spending for the past year or something.
Well, it actually kind of makes sense that way, because it's purely based on how people are using it.
Does it make sense? Does it make sense that the dust limit has been the exact same when Bitcoin was worth $100 and when Bitcoin is worth $100,000? Does it make sense that the dust limit should be the exact same amount of Satoshis?
No, I get your point. You're right. I just think that's a major change. Like, I like it. Don't get me wrong, but like, there's some interesting things to consider if we did that, right? Like,
it'd be a long term. Like what I'm proposing, it wouldn't change the dust limit by a lot. It would be like a tiny gradual. It'd be like next year it might be 0.9999 instead of 1. It would be like really tiny change.
Is it gameable?
You could have really long spans, like,
And it would change based
sure.
on the Bitcoin price. So it might go up, if the Bitcoin price like went down.
And it actually does kind of make sense to use that specifically because it's responding to how people are using it.
Right. We don't want to be pricing out everybody. We don't want to make it so that only 5 people in the world can send a Bitcoin transaction because no one else can afford the dust limit. Like there's got to be like some kind of balance,
Yeah, and I think the assumption at the moment is that we just make a crude change to it without changing it conceptually. We would just make it 0.1, which is what the proposal is at the moment.
Right. That's crazy. That's stupid.
I agree, because that's a race to the bottom again. Like it's just going to be, just keep it logically and conceptually the same, but keep tweaking the variable to accommodate this stuff. And it does feel to me as stupid as changing the block size. Like that was the dumb thing about the block size, right? We got more Bitcoin users, so blocks have to get bigger for us to stay where we are. Like it's that dumb, right? So it's like, So I like what you're doing. You're thinking outside the box on it, and it's smart. It's just one of those things. I'm going to write it in our Ocean internal chat after this meeting, and Luke's going to comment with a clown emoji and then not explain himself, because that's how Luke operates. And it's like, so why is this bad? And then like 6 months later, he'll finally explain it to me with like 8 words that completely blow out everything I thought about. Like this is reality, like dealing with Luke inside Ocean. It's just like,
let me send you a chart of dust limit, Bitcoin transaction, Bitcoin price, and median Bitcoin output, like all together. You can send that to Luke.
I think we need a BIP for the new cross input signature aggregation thing.
New?
And
is there a new proposal for it?
Yeah, they figured out how to do it with the current curve and everything. This SecP 256K1. So it doesn't actually require any new like cryptographic assumptions. You'd have to soft fork in the logic to say like this is a combo signature of like a bunch of other signatures so that it can properly verify each input against it.
Is there a computational cost to transactions that make use of this?
I hadn't dug into like explicits on like how much computational. I mean, I think it's actually, I don't know. I'd have to, my assumption on how I'm thinking about it could be wrong, but my naive assumption would be that it wouldn't change much.
Would it need a new address type, or is that kind of the magic here? You could use legacy address types and like,
I'm pretty sure. Actually, address type. That's a good question.
That was the main thing with Caesar before, is that like this is why even like the Wasabi guys were like meh, because they're like everyone would all the joins would have to be the same. All the inputs would have to come from the same address type. This new cross input signature aggregation forked address type, and like I don't want to keep making new address types. Ultimately, it creates These are all shit coins in their own way because they create subsets of users. Like
I don't think so, because the address type is really about like what you're doing for the signature, like what different thing you're using, whether it's Taproot or SegWit, or you're doing a hash, or you're doing the public key itself. Like, whereas that's not changing, you're actually changing the same. I mean, you're actually using the same type of signature in the same curve. You're just combining the signatures.
Well, that's going to be a secret sauce then. If that, like, is this conjecture? It sounds like, but if that's possible, that's huge. Because the main reason with cross input
it's called
signature
Jolius. I did an episode on it, but the Bitcoin Magazine article is like, it is a couple of Blockstream engineers were kind of tasked with it, and they're like, all right, we did it, and they proved the case and that it works.
That's amazing, dude. Yeah, because the main, like, a big criticism of cross input was like, we'll all have to first move all our UTXOs to that new address type before we can start combining, which is going to have a footprint, a massive footprint. If we can do it with existing UTXOs with a new signature algorithm, that would be great. But the bad part again is, getting everyone to agree on a soft fork, the mechanism for doing it, and then if you can have a very, very dense bunch of signature aggregated data that has to be processed that only uses like, a kilobyte of on-chain data, you can potentially make a block with this stuff that takes like multiple minutes for the network to process, because it's just that there's that much computational cost to it. Like if you know, like the stuff clawing through a megabyte of data and verifying it with the current simple signature stuff going on doesn't really take that long. So blocks can be verified and validated and propagate around the network pretty quick. I think cross input was like, that was always the nastiest trade-off about it, is like you can have so much input data aggregated down into a tiny amount of block space that is really, really slow to verify and pass around the network.
So I'll need to verify this, but giving the links to Perplexity, it says that Dalius would be usable with the P2PKH. So anything that starts with a 1, a 3, BC1Q or BC1P, because it just uses the same curve. So you'd have a now the question would be is, can you use separate ones, or do you have to use all the same kinds of ones?
That was my next question.
Yeah. I don't know. Again, I'll have to dig a little bit into this, and Perplexity might not be totally right about this, because it's, it will just pull from stuff. So
since we don't know about that,
Yeah.
Tell me, has there been any improvement in the number of NOTs nodes or
where are we sitting there?
datums hash power?
A lot. Yeah, we've we had a lucky streak like a week ago, and we found 10% of the blocks one day, and they were all datum blocks. So that's just like,
That's awesome.
if you're not filtering spam, you're overpaying now with your fees. So the whole fee estimation argument gets flipped on its head. Like if there's a miner out there, a significant miner filtering out inscriptions, you don't need to compete with them for block space. You can literally just pay less. So that's been good. NOTs is suddenly jumped up a bit, and it's near 16% now.
Nice.
So I think
Nice.
once NOTs hits 20%, that feels like kind of a significant psychological threshold. Like users really are saying to core, like, you're not meeting our demand, which is, we want to be discriminatory about what we filter around the network. We want to be, conscientious citizens of the network. We don't just want to be free relay services and beg pools like Mara to only include what we relay by virtue of us relaying everything they could possibly ever want. Because I think Mara are going to kill Slipstream anyway. Like, they've made 20 Bitcoins out of it. And there's a whole bunch of like subtle reasons here that I probably can't go into, but I don't think it's viable for them to maintain it much longer. It doesn't pay for itself. Generally, people want to respect the rules of the network. So yeah, there's been a lot of adoption of NOTs. NOTs has been adopted a lot faster than datum. But I guess, running a node, you can adapt quicker than like a giant miner that's never run a node in their life, let alone made their own block templates. So, but it's going really well. I think miners are drawn towards it. It's not that hard of a sell because we're the only pool that does a whole bunch of other stuff too. Like, there's no other pool that lets you verify that other miners are getting paid something appropriate out of the work you did. Like, no other pool offers that. They're all private, but therefore they're all opaque. Ocean is a privacy disaster because it has all of its data public. So it's just like Bitcoin itself. You can verify everything, but if you don't know what you're doing, it's just completely public information, and you need to know how to protect your privacy. So yeah, it's going well. We're doing well. Like, when Peak joined, things really stepped up a gear, and we just hired this new guy, Nacho, who's like just a sales force guy, and I reckon by the end of the year we'll be up like 20-30 exahash, something like that. And that's then we're finding a lot of blocks every day, and we should swallow the whole industry because we pay more. So that's been the main thing. Like, Foundry just put up their rates, and they were the only fair FPPS pool anyway, apart from SBI Crypto. So, and everything else is just ant pool, and they're all dodgy as fuck. Those guys are completely just like, no one trusts those guys. It's insane. So yeah, it should just be a case of like, numbers keep coming out. We keep saying we pay more than other people. A bunch of people always don't believe us, and then I always point out that our stats are public. We're the only pool that can't afford to tell lies like that, which is not a coincidence why we're the only pool that like all the pools that don't have public
If
information
you don't
pay
share
less.
it publicly, it's really
Yeah.
easy to not.
Yeah.
It's really easy to make a claim that you can't
Yeah.
back up.
McKenna, have you guys thought about the long term? Like, let's say you guys get close to 50% and people start getting upset, but because people run datum and people are creating their own block templates, the whole 51% of a mining pool thing is kind of a little bit different for you guys because
It doesn't apply.
yeah, it doesn't really apply, but like some people are going to try to find a way to make it apply.
I don't think so. I think so. A 51% attack is like, it depends what you mean by minor, right? Like Ocean,
Right.
like Foundry, found the traditional, the legacy pool model, as I try and call it in a sort of alpha male way to insult the entire industry as it currently stands. The legacy pool model is like, the Foundry is the miner, right? They're outsourcing the hashing component, but they are the miner in that they run the node and they construct the template. So they can do a 51% attack. The reason it wouldn't be as like if they were a solo miner with all their own hash rate, that would be the worst case scenario, right? If Foundry had 51% and it was all their own hash, then we're screwed.
Yeah.
Next worst thing is Foundry do everything about mining except the hashing. Then if they 51% attack, the miners can all theoretically just leave, but most of them have, there's so much regulatory capture now that actually it's not practical for most of them to leave, to be honest. And their 51% attack would probably be something that most of their shareholders would agree with.
Yeah.
And then the next rung down, though, is like Ocean is just a dumb coordination layer for miners to pay each other in the blocks they find. So the stuff we could do with 51% attack is pretty minimal. Like we could start being annoying and
you could like not pay somebody, right?
Yeah, we could not pay people, but we can still not prevent them from making the blocks they want to make and publishing them directly to the network. So from Bitcoin's perspective, it doesn't care. It's like, oh, a bunch of miners didn't get paid what they were supposed to according to this tertiary coordination layer, but that I don't care. Like I'm getting blocks from this guy, this guy, this guy, this guy. They're not all coming from this one node run by a company that constructed a template that is complying with some, blacklist. I think like it's not perfect, but the final rung of that ladder of decentralization would be like every miner using the same protocol where there's zero risk of a 51% attack. That's the theoretical perfection zone, but it can't really happen, I think, because every project that tries to do it has to compromise somewhere else. So obviously P2 pool can't scale. And the fundamental issue is miners can't all verify all of the other work done by everyone else on the pool because it's impossible to scale it. You need a centralized entity for that. People have talked about getting around it by using things like eCash to pay people for the immediate rewards for their shares and stuff, because obviously you can't pay like 20,000 miners out every time you find a block in the block itself because you just don't have the space to do it. So and half of them are going to be UTXOs that are too small to be spent anyway. So I think Ocean's about as far as you can practically go, and I'm amazed that it worked at all, but it did. I think like the people that hate us, and I've seen you arguing with these people that just refuse, Guy. I've seen you having arguments that are just like, oh, it makes no difference.
I'm gonna make a video about it. I've already written most of the script because like I'm just so sick. I can't believe that people don't get like this is a simple argument. And what's so funny is that it is the exact same argument. Like it's not even like kind of the same argument. It's the exact same argument about using a light client for your wallet or running your own node. Like it's the exact same risk profile. It's for the exact same reasons. Is that does your wallet follow your central provider, or does your wallet know everything that's going on? And if somebody forks off or tries to, create fake information for the network, your node knows. Like you don't do anything. You don't lift a finger. Your node just doesn't follow them. And like this is the exact same situation if you're building your own block template, is that the only thing Ocean can do if they try to say that if none of the miners are, everybody's like, oh, well, they'll be forced to participate. And it's like, you're telling me that we're talking about a blind situation, is that if Foundry right now said, okay, everybody who is hashing with us is now going to perform a 6-block reorg. and we're going to take this transaction out of the block. Not a one of them knows about it.
Mm-hmm.
If I'm plugged into Foundry, I have no idea that it's happening. In fact, it could be until after the attack is done that I even realize anything happened. And somebody had to like message me on Twitter or send me a text. And I find out that it's my pool and my hash that was done to create this.
Yep.
If Ocean did this while I'm plugged into Ocean running Datum, and Ocean said, I'm going to reject any hashes. Now, let's say they have a 90% of the freaking hash rate. It's a whole network, right? And Ocean says, I'm going to reject any blocks that aren't doing a 6-block reorg. Why would anybody who has the hash power be doing that? Ocean has 0% hash rate.
Yep.
Like Ocean has no hash rate. Like it's not even, there's no attack. Like they have to literally like message people on Twitter and be like, please do a 6-block reorg with us or we're going to, not pay you or something. It's like, why would I do that? Like the risk is to the miner and their payout, which is a perfectly acceptable risk because it means that the network doesn't have to give a shit. Nobody has to care.
It's a very
except
good
for the
point.
miner for their own situation.
Yeah, it's just the nature of us pulling it off is much more conspicuous, and like it's just not a realistic thing for us to be able to do. In theory, like these haters are correct. Like we still have some influence over our miners' behavior, but it's just so reduced.
But it requires active participation by everybody, which is not the risk. We don't think that 51% of all of the miners in the world are going to actively participate in attacking the network,
No,
Like,
but they
that's
might
not
do
what
it
we're worried about.
accidentally.
But they might do it accidentally. They
Yeah.
might be tricked into it.
Yeah.
And in the conditions, in the situation of Ocean, they can't be tricked into it. In the situation of like Foundry or Antmain, they can be tricked into it easily. And in fact, they can contribute to it without even having a clue that any of it is even happening because they're doing nothing to check. They have no control over it whatsoever. They're renting their hash rate to somebody else. But anyway. Yeah.
No, I appreciate you saying that, man, because it's been frustrating dealing with it. Like don't let the perfect be the enemy of the good, they say, and it's such a disservice to it, and it's very frustrating. Like, I get it when you build a product that does something pretty good, and someone comes along and says, "Oh, here's a hole in it," but doesn't have a better alternative. It's a very frustrating thing to deal with because you assume they're operating in good faith and that they really do want mining to be more decentralized than it currently is. And you're like, well, you're just hurting that cause then, but
That's
And I think most people have just connected it to the filter debate.
that did cause a lot of bad like resent and stuff for sure.
Yeah.
Like,
And so they don't want to entertain the fact that like Datum and Ocean are like really important projects because Datum and Ocean mean filters in their mind. And they disagree with that topic. And so they can't see, I think most of them can't see the value. They can't recognize it's like thinking, oh, I'm against SegWit because I don't like Luke because Luke is I don't know, he's super religious and I don't like that.
Yeah, well, these things do combine in people's heads. I get that. Like,
it is weird.
It takes a certain kind of autism to be like, I don't like this guy or any of his opinions, but he's right about this. Like that's really hard for people to do. So I get it. I do openly say I'm the same. Like if Klaus Schwab proposed a BIP that was a good BIP, or if the Taproot wizards tell me I need
I would question the shit out of that. Yeah. No, I feel you.
And Giacomo was like, that's an attack because all of the bad people can come and suggest all of the best possible upgrades, and then we reject them on that premise. And then we've never, like, OpCat could be great, but because Udi and Eric proposed it, we're never going to implement it now. So it doesn't matter if Andrew Polstra also says it's good. Sorry, it got contaminated.
Out the gate. It was poison from day one.
I've had a related thought about Ocean being kind of the supporter of the development of knots right now. And let's imagine, I'm not sure this is true, but I think Mechanic, you probably think it's true that like Bitcoin Core is kind of downstream of what the other mining pools kind of want to see in the code. So like, what if we enter a world where the regular person like me or just average Bitcoiner, when they go to choose their Bitcoin client, they have to choose the client that's maintained by like one of the mining pools?
Well, generally, the pools don't offer what they do. None of them run vanilla core anyway. and
Yeah.
they typically close everything up. Like the standard in mining, sad to say, is closed source proprietary everything from the
Oh, yeah, I believe
firmware to the whatever the
Okay.
pools are on at the back end. So I don't see them being generous with each other at all.
I don't know Core's future. So I'm like wondering like what the future of like Bitcoin node clients that the regular person is going to choose from, and like who is going to be paying the developers of those different clients. Because it just doesn't seem like we're going to have this pure altruistic community making a reference client. I mean, maybe I'm totally wrong about that, but
I think no. I mean, precedent is on our side. Like back in the day, in early Eligius days, most blocks were made, or the templates were made with knots, not core. But I don't think it was even called knots, and I don't think core was called core. Like neither of those things had happened yet. But Luke was maintaining what would be eventually called knots, and that was what was getting used by mining pools, and they all knew each other. Like personally, it was a smaller, more friendly community, right? It all turned kind of south after what happened with Stratum and what happened with Bitmain taking all of Luke's software and just closing it up and violating all of the copyleft licenses, right? Like, that was all, it was all done in the spirit of openness, and Bitmain just took it all and closed it all up. And there's nothing you can do. It's in China. They don't care about intellectual property and stuff, or they don't respect IP as it's kind of like if you have an MIT license on something, like the Bitmain will just ignore it and use it anyway. So yeah, to answer your question, I just think knots will be what everyone uses, because I think it will probably just incorporate Datum at some point, and miners want to be able to make their own templates, and like they're going to rip the wallet out of Core. I'm sure of it. Like I don't know what Core is for at this point, other than virtue signaling that we will just bend over for spammers and pools, even though the pools will completely ignore it. I don't get it. Like I think so. The Stratum software isn't in there anyway. That's probably understandable given how bad Stratum is, but the wallet going as well just means
I don't understand that direction.
Well, they don't want to maintain stuff like that. The argument Antoine made is that like they want to treat it like a business, and they want it to be, they don't want to ignore market signals. So if there are op returns bigger than 80 bytes, that's a signal that people will use something other than Core unless Core starts facilitating greater than 80 bytes to be relayed by other people that aren't the people making the greater than 80 byte op returns, but people that want you to relay it. To me, there's a disconnect in that argument, and it's just so insane given that we've seen this 15% migration away from Core to knots on the opposite premise that the people using this software want to filter it. So I don't know. To me, it just feels like what are you doing, guys? I'm baffled by the decisions here, and I can't really even steel man it.
You don't actually have to sell your Bitcoin to access its value. You can actually borrow against it very easily without selling it. But when you do this, you need to be careful. You need to do this with a company that is trusted, one that has survived a bear market, and one that will literally show you that they have the coins, that they have proof of reserves or some mechanism where you can look at your balance and know that it is safe. This is why I've been a huge fan and a customer of Ledn for a few years now. So one of the Bitcoin-backed loans that I got a few years ago to finish renovations and the basement and studio in my house, I would have paid 3 times as much Bitcoin had I just sold it, as it now takes me to just pay off the loan. And that's if I sell the Bitcoin to pay it off, which I think I'm going to be able to get equity out of the house and pay off the loan and get all of my Bitcoin back. This especially makes sense if you're making an investment. If you're doing something that is going to pay you income in the future, or if you're investing in Bitcoin mining, it's a whole lot easier to beat the interest rate if you loan against the Bitcoin and keep the Bitcoin. Ledn also makes this like crazy easy. Like if you went to do this right now, you could probably get the money by tomorrow. They do proof of reserves twice a year, and I check. It's a very easy process. And you don't have to do monthly payments if you don't want to. You can just accrue the interest and pay off in chunks whenever it makes sense. And best of all, they just recently got rid of all the noise. They had some other features. They had Ethereum loans. They're like, nope, chop it. They had a yield product. Nope, chop it. They had loans where you could get a lower interest rate and they didn't have it on their books. They lent it out. Nope, chop that. Now it's just custodied, fully backed Bitcoin loans. Doesn't work for every single situation or every person, but there are some times where this is an incredibly valuable tool to have. Don't overextend. Remember, Bitcoin is volatile and read the details. But if you need access to your Bitcoin's value and you just don't want to sell, Ledin is a brilliant and simple tool for doing exactly that. And I've been a happy customer for a couple of years now. You can check out the links right down in the show notes. It's LEDN, ledin.io.
There's a news item that I want to get to, and there's a bunch of like little like bite-sized things that I think are worth hitting, but none of them require like a long conversation, I don't think. But I might be curious. I want everybody to. I'm gonna do like a little like
Quick fire.
quick fire for these. And then anything that stands out, y'all hold it in your head. And then like, if you want to like drop a comment. But we actually already mentioned this, but we didn't explain it. So Square is actually now onboarding merchants to accept Bitcoin payments. So Bitcoin and Lightning will be available in their point of sale terminals. And actually just a note on the Lightning is, and this is a shout out to AlbiHub, is while I was in Lugano, I actually went out to a place because like a ton of merchants in Lugano actually accept Bitcoin and Lightning and Tether. I actually went out and had some dinner and paid with Lightning at the end. And I used AlbiHub connected with Nostr Wallet Connect to my Start9 right here at home. Worked like a charm.
Does that connect over ClearNet?
It connects over ClearNet, yeah, with Nostr Wallet. Yeah. Like Nostr Wallet Connect is the only way. I won't connect over Tor.
It's a waste of time. Yeah.
If I was doing any other thing, I'd have to do Misty Breeze or BitKit or Phoenix. Whatever had enough balance. Those were the only, or Aqua. But again, Aqua's usually got higher fees, so I'd stay away from that one. I wasn't sure if it was going to work, and I almost felt like, oh, this is kind of risky because I'm in Lugano. I don't even know how good my connection is. You know, I've got like an international plan right now, but I risked it, and it worked like a charm. So I was super happy with it. But Square is now onboarding merchants, and I think they said by the end of this year or very beginning of next year, it's going to be wide release. And I actually went to my favorite coffee shop and brought it up, and they actually knew what I was talking about, which I thought was interesting. Maybe they sent out an email or something to merchants. Because I was like, do y'all have Bitcoin on this yet? And like, no, I saw that Square is going to be doing that. Of course, the guy, one of the owners there, will always mention, it's like, hey, Bitcoin. And like, he'll like point at me and just be like, hey, that Bitcoin price doing good, right? Every time I go there.
Yeah, we'll see how that owner feels when the employees realize how difficult it is to split the tips that are on that Bitcoin transaction. And is the tip a different transaction than the regular transaction? How do the different employees split the tips that they get? How do they convert it into fiat afterwards? Yeah, we'll see how that conversation with that coffee owners and his employees goes. It's gonna suck.
That is exactly something that Square...
They're all going to fucking leave. All my bartenders have like threatened to leave if I do this complicated Bitcoin tip stuff with them.
That's wild. That makes sense, though.
There's got to be a way to reconcile that. Just like
there is, but it's a lot. It's a lot of work.
The software needs to have it done. You know, like it needs to be like you don't have to touch it or think about it. It just works.
Exactly.
Anyway.
Well, isn't there a way to do that? Like this was an ocean issue, like because we have the share market coming where it's like people can buy other miners' proof of work before it gets rewarded in the share window, and that required us to be able to do like multi payments, like to multiple Lightning invoices.
You can already do it over.
Well, you can do like Lightning splits. I feel like that increases the likelihood of like a payment problem. And I think there's enough of a threshold of that potentially being a problem that it makes more sense to just receive it and allocate on the software side so that they can then be redeemed. That's not even like a super difficult problem. It's just that your point of sale, your system has to be aware of it. Like it has to care and actually solve that problem. But if I am paying to somebody, then the invoice needs to be specific to them. And if I'm giving them a $10 tip, well, then the $10 needs to be allocated to them if it's $10 over the thing. And then at the end of the day, they can withdraw that $10 worth of tip, or, withdraw it in dollars and take a 1% fee to swap it or something,
Well, the issue we were having is like, if you want to buy a bunch of Lightning guys proof of work and you actually want to buy something quite significant, you need to make a bunch of purchases simultaneously as part of one thing. And Lightning doesn't have a way like this. Vincenzo's like at the protocol level trying to make Lightning accommodate a thing where you can make a payment that pays multiple invoices at once, some of which can fail and the others still succeed. Because at the moment they will all just fail. If one of them doesn't work, they will all fail. And we need fault tolerance in there, and that requires actual protocol stuff. So that's coming. But there's also like we just released a new version of Datum that has reward splits in there, which was a really requested feature. So that's something probably worth mentioning on the show, because it's miners want to mine to two places at once, and there are no accounts in Ocean. So we had to make Datum able to actually do reward splits. So that's out now, and there's a bunch of miners doing that.
I really think a lot of this is still just that stupid disconnect between developers and users. Is people who think like this thing is done because like, oh, we can just do this, and not realize what it's like when people, again, when somebody's at a bar just wants to get their tip, and like there cannot be some convoluted thing of like how to split it or like do like that's a very simple and very real practical problem.
Yeah, it has to be better.
Yeah.
Bitcoin is a better foundational money than the US dollar, period. Bitcoin is not a better payment system.
No.
Lightning is not a better payment system. Okay.
Yes.
Don't shame people into using a product that sucks. As long as Lightning is not better than Visa, people will not use it, period.
Yeah.
You can't shame people into using something that sucks. Why don't you shame people into using fiat because of some moral, ethical reason? No. Like, it doesn't work.
The problem is if we don't do that, then you end up with someone that comes along and makes it easy by centralizing everything. You get the Gmail equivalent of Bitcoin. Someone comes along and says, hey, this protocol is impossible to use. I'll do it for you and harvest all of your data and control everything you ever do. Like, someone will just do that.
I mean, little pockets of centralization are the best solution for a lot of problems in the world. Like, foundational money is a very strange little part of the world that requires decentralization. Like, everything doesn't require decentralization. Like, we don't want like restaurants to be like decentralized. Like, we want these little pockets of centralization, and that might be how it goes for payment services. Like, it's only the foundational system that has to be decentralized.
On that note, I mean, I can kind of agree with it, because if you have a foundational money that allows you like people to compete with services to compete with each other, and it's very easy for a 15-year-old to provide essentially lightning services or banking services for their family or whatever, then you have no barrier to entry in terms of competition, and competition can keep like little centralized things honest. But I mean, there's still all sorts of problems in terms of like things being interoperable between, like it's sort of like the Mastodon problem, right? But what's funny is that you're talking about the splits problem is that one of the issues is that people not even recognizing things as a problem, because like I've been talking about for years, and I mean, I could do. I'm a person. I could do something about it, but like there's a serious problem with online transactions. Like if you want to build the next eBay, you want to build some sort of decentralized marketplace, what Bitcoin needs, what a wallet needs, is some way to do the like escrow, two-party escrow site sort of service that Silk Road offered in a centralized fashion, like very early on. And you need some way to do that with payments that are small. So whether it's a second layer like Liquid or eCash or Lightning or whatever, you need some way to lock up the money so that you can send somebody something and they can't take the money until you approve. Like they know that you've put the money, there, but you can't move it and they can't move it until both parties agree. And that's such a huge thing. I mean, like with Facebook Marketplace, I don't even use that aspect of it, but they actually, Facebook has a way to like lock money or something if you're doing online transactions through them. And not having that just makes, there's no way, you're never going to bootstrap a decentralized marketplace or anything else without that. Like that's just a foundational, like fundamental thing. Like nobody wants to send, you don't want to send $100 product across the country and hope that you're going to get paid. You don't want to send $100 of Bitcoin to somebody and hope they're going to send the product. So like, there's no, you're just never going to make the transaction.
No, yeah.
I just think like, I don't know. I could be wrong about this. Like, I'm not sure, but I see payments and money as, different things. Like,
No,
I don't
100%.
want there to be one grocery store. I want there to be a multiple competing companies, different grocery stores. We have so many different types of payment systems: Apple Pay, Visa, MasterCard. All these things are competing with each other. Like I see payment systems as a service, a good. I don't see it as like a foundational thing that requires decentralization, like money or language.
Well, yeah, the trouble is surveillance, right?
I think there's a degree. I think if you have a permissionless protocol for the money where you can actually interact, you can have a degree of sovereignty and competition in the offering of payment services that makes surveillance not a necessary part of the system. When you have a fiat structure, you basically have to have surveillance. Like there's not really any way around it. And you're also going to have like massive consolidation because the end of the line is always credit. It's always like, are you credit worthy? And if it's always a question of, are you credit worthy? You need a credit system. You need to know who you're dealing with. You need to know what their debts are. You need to know what their assets are. Like, so at the end of the day, the foundation of your system, no matter how many layers you put on top of it, it's kind of like Maxwell talks about, is that you can't, the foundation is as decentralized as it gets. And, like if you compromise at the foundation, then it doesn't really matter what you put on top of it. It's all really just kind of a facade. And if push comes to shove, you're going to collapse down to the centralization problems that are actually present at the layers below. So in that way, I kind of agree. Payments, I think we're going to have hundreds of thousands. I think we're just going to have an unbelievable amount of payment networks. There will be some degree of consolidation. Like they will have to speak some sort of common language, on which I still the way that everything is going right now, it's Lightning, in my opinion.
The common language is going to be on-chain Bitcoin.
It can be Lightning too.
Well, I think Lightning will be the invoice mechanism.
Like if the common language was just a lot of small people that just settled these debts, a lot of small companies, and the common language for the whole system was just on-chain Bitcoin, this would also solve the dust limit problem too. If it became such that like when you made a Bitcoin transaction, it was to settle a debt. It would be a larger amount, or it would be to get some loan to establish some credit-worthy thing.
I agree.
Why are we sending $100 on chain? That's crazy. Because like Lightning isn't good, and like people still use $100 on chain. But if we have a bunch of small scale little payment systems, like little Apple Pays, little credit cards, these small instantaneous, small time frame credit things, pay off your balance once a week, once a month. This would work so much better for payment systems at like bars and restaurants, coffee shops, point of sale, that kind of thing.
Yeah, but you mean private ledgers, basically, with trusted third parties. Like, I think the problem with that is either you get rugged or you get institutional capture. I think you basically get one or two of those. You'll get like competition, but they'll all be regulated the same way. That's the problem. Like
it's about the scale of the risk, though.
Yeah,
I mean, of course, that risk always exists.
I'm all right with things like Liquid. Yeah. I think Liquid is like really practical, and I think like if you wanted to do LBTC for everyone in your bar. Like, it's going to be
Mhm.
cheap. There's confidential transactions in it anyway. The risk of being rugged is always there, but it's not that severe, and it's only your tips for the last however many weeks before you pull out and convert to regular Bitcoin again. I just don't think that's that bad, and I'm kind of compelled to, like, I know this is all useless, but I'm going to say it anyway. Like, the idea of like ending up with zero knowledge proofs or roll-ups of some sort that allows like the BitVM guys to come up with a side chain that does liquid without the trusted federation and completely makes it all, so you can unilaterally exit and all that stuff. It looks so good on paper. I don't think it's ever going to happen, but the idea that you can have just side chain after side chain after side chain that you can move between via Lightning, and if you want to, like, that just sounds like heaven to me. But I don't, and it's not that technologically unfeasible, but I don't think, like, no one's going to merge op ZKP into Bitcoin, and they're huge. I think, like, if you want to use like ZK Starks, they're like enormous, and if you want to use ZK Snarks, you need like a trusted thing like Zcash has, and this
like
is
an Oracle type thing.
like something just I don't know, but Snarks are smaller than Starks, and like this, I don't know, like
The namings of all this stuff, man. Holy crap.
yeah.
I think people, and myself included, have misunderstood where Lightning sits in the stack. But I think Lightning is going to be the common language because it will be infrastructure. And on-chain is so easy to get around in the case of, like, Lightning actually rebalances the economic problem of settling the transaction being relevant to the amount of the transaction, like the value of the transaction versus the data that it takes. And I think that's critical for a payment structure to actually work. And so Lightning will actually, and I think we're seeing this. If, like, the only way I'm using eCash is I pay Lightning invoices. The only reason I'm using Liquid is because I'm paying Lightning invoices on Aqua and on CoinOS. Like, I've never paid somebody directly to Liquid. I've paid to a Lightning invoice. And when it doesn't work, or if it doesn't work, the point is that the infrastructure on the back end, they just need to do an on-chain transaction in place of the Lightning, so that if liquidity simply isn't there, they just go around the liquidity problem, and that's the service they provide, and that's where their fee goes. And this can all be built on the back end. So in the case that Lightning is 98% effective, well, they're in that 2%. That's when the service provider pays the fee, and that's how they provide that infrastructure service so that everything can communicate with a Lightning invoice.
Right. And they'll end up being like 5 to 10 of these global service providers globally.
I think there will be way more. But it will seem centralized. It will seem semi-centralized, like, from the context of like what the dream would be. But I don't think it will be, I certainly don't think it will be 5 to 10. But you think about it, like, I think it will be like the number of banks that we had in like 1990, when it comes to like a country. So you're looking at probably like a few thousand. And I would think that's probably, based on like the size or degree of population. Whereas, post great financial crisis, it's just consolidation.
Yeah, of course.
I think like one of those companies could do that would actually make it a better experience, not like the crazy headache that Lightning is right now, is just say, like, just have a Bitcoin balance and have a credit card, and just, or even if it's like a Visa anonymous gift card, if you're worried about the whole, like, whatever, the surveillance thing, and just be like, look, here's my Bitcoin, here's this, and just like send me a bill once a month and I'll send you a Bitcoin transaction. And then like my Visa anonymous gift card just works everywhere.
Yeah, I love all these. There's a million practical suggestions like that. I completely agree with you, and I agree with the need for that kind of thing. I'm just always scared about the ability to surveil these things, because these are the choke points and the on and off ramps. And the minute you get good UX and you get away from technical head fucks like Lightning, you just end up with someone saying, "Don't worry, I'll solve the problem. And I will log everything you do. Otherwise, I won't be allowed to exist as a company."
But the surveillance thing will apply to these companies that are taking the fees that Guy's talking about too, like collecting all the Lightning channels and taking fees to rebalance Lightning channels. Like, those companies will be just at risk of surveillance as the companies I'm talking about.
Yeah, which is why I prefer side chains. because
Mhm.
Liquid can't really do that kind of surveillance. They kind of can, but like, I don't know. Like,
I think federations are really undervalued
Yeah.
because they're not some like perfect holy grail solution, but it's in the face of like somebody who doesn't have a perfect holy grail solution. It's like complaining about datum and not realizing what
Yeah.
order of magnitude better setup it is than Stratum V1. And whereas like the Federation can
Completely
actually
agree.
rug you, but like there is no multi-sig in fiat.
No.
Like people you cannot wrap your head around how much, like
That's a
how
good point.
vastly superior needing 20 out of 30 globally distributed, jurisdictionally distributed institutions it is to screw an entire subset of people in which they can't see individual balances of any individual participant in the system, and you need them to collectively all destroy their own reputations or all be collectively hacked while they're running global infrastructure, to not realize that that is an order of magnitude better than just the central bank deciding to print $6 trillion out of thin air and there's not shit that anybody can do about it, or your bank just freezing your account arbitrarily because they don't think you should be able to spend this money today.
Or using a card that is a pull system.
Yeah.
Where every time you spend money, you're giving them all the information they need to rug you.
Yeah.
I think
Yeah.
and there's no kill your customer stuff either, right? Like, so I completely agree. I think you're like talking about datum versus like a pool that makes the templates, and that's the only work you can do. It's a valid comparison. Like, the multi-sig element is huge. That's significant, and and it's also, what's the risk of it? Like, really, really onboard into Liquid, like DCA into Liquid until you have $1,000 and then convert to on-chain. That's so valid. Like, worst case scenario with that, you lose $990 or something before you made it to your threshold where you withdraw. And that's not the end of the world. Like, that's such a valid way to onboard. And like, because like you say, they have to go to all that effort, get all these jurisdictionally independent entities to all agree to rug someone that has no unified account balance anyway. And then to do what? To rug you of like your last 3 weeks of DCAing. Like, it's just, that's such a practical approach to do it. And that's why I like the Bull Bitcoin integrated with it. And they're one of the Liquid like people anyway. But
and I think it's a complete failure to recognize the reason and the scope. Like, that this is all about value scale, is that like the reason you need trustless, completely decentralized, completely sovereign, completely permissionless money is because of the scale of the value damage that can occur when you don't. And everybody has this hyper focus on retail payments, when retail payments are literally the smallest, like they're the tiniest drop in the bucket for where like real concern is. But it's the thing that's most obvious in front of the user, right? It's like if somebody freezes or says, I can't make a payment with this person, obviously I'm immediately and instantly affected. Whereas if my currency collapses over 30 years, I don't really think about that as being like, I just think my government sucks or corporations suck or whatever it is. Like it's a very different relationship to the actual user, because I might still have money in my bank account and that never got frozen. But it makes perfect sense that you have a trust hierarchy, that you can easily go centralized or more trusted or federated or whatever with $50 worth of value, $100. Well, it's obviously different for everybody in every situation. But in my situation, obviously $50, $100, $500, sure, whatever. I don't really care. I'll keep $300 in a Primal Lightning wallet or something, and I'll just use a centralized thing. Then when it goes to 1,000 or 2,000, I really kind of want to use Lightning. I really kind of want to use something where I know I'm holding the keys, but I can still kind of get the benefit of using it. And then anything above that, like, no, it's on chain and it's mine.
This is what I like, and putting it this way is weird, but I think everything Steve says is completely right. Like, treating it like a technical bootstrap thing where you got to learn to tie your own shoelaces to get people to use difficult payment networks is not the way. It's never going to work. people are just going to go to the most centralized possible option and the worst, most abusive system ever. But so I think like the best thing ever, which is a stupid thing to say, but I'm going to say it anyway, is people need to just onboard into trusted systems that they know they can't really trust. And people need to get regularly reminded of that by occasionally having everything they own.
This is
get
getting
stolen.
clipped so hard.
Like, yes.
I need
so hard.
I need
Yes.
people. I need people to
Rugs.
onboard into trusted things that rug them regularly, so
Yes.
they know
There you go.
I better get this into on chain. Like I've made like 20 grand in tips over the last 6 months. I need this on chain. Like, and the only way they're going to get slapped in the face is like, if we live in a low trust society where people are like, this is getting too hot for me to deal with. I need to withdraw this. Like, like. I hope it happens. We're doing well with this quick fire thing, aren't we? Like,
Yes, we made it through one. We made it through one. Actually, let me do the quick fire so we can get to this topic because I really want to hit the
go
quantum.
pretty soon. So
I'm sure you do. I'm sorry. Okay. PNC Bank. We talked about that. That's actually cool. They're about to offer Bitcoin. SpaceX consolidated $153 million worth of Bitcoin. And they just moved it to one address. Everybody's like, oh, they're going to sell and all this stuff. Nothing happened. So not sure if there's any news there really. U.S. Marshal Service holds. This one was cool when I saw this. So Lola Leeds, she had a bet with, was it David Sachs or was it Rizzo? I don't remember. But so the White House or Trump or whatever is saying like, oh, we have 200,000 Bitcoin. Well, Lola Leeds from The Rage, I'm pretty sure it was literally Lola, did a Freedom of Information request and like forced them to disclose exactly how much Bitcoin they have. They only have 28,988 Bitcoin left. So they had been selling their 200,000 Bitcoin, and the constant like we have 200,000 Bitcoin. It was all BS. They only have 28,000 left. And the Lola Elites won a bet or a gamble or whatever, and won some Bitcoin. I think it's like $10,000. I could be wrong on the amount, but I thought it was hilarious. So that was pretty cool. IMF report reveals El Salvador actually did stop Bitcoin purchases after the whole loan thing, and that their kind of continued claims of like daily accumulation may have actually been them moving stuff from a different address to making it look like they were still buying. Now, I didn't confirm this, and this was just a Cointelegraph assumption as to what was going on. But that would actually be interesting if they're just like posturing that we're still buying Bitcoin, and they actually haven't been. UK Chancellor, no, I didn't care about that one. US Treasury Department. Okay, so we've got 3 acts. So first, this was the political stuff that was kind of a big deal. The crypto broker tax rule, requiring non-custodial service providers to file customer transaction info, wiped. So that was taken out. The whole U.S. Treasury Department and IRS, that has officially been removed. And that is amazing because that has been like a huge problem. I think that's part of why Phoenix and Wallet of Satoshi and stuff are kind of come back to the U.S. And then the Clarity Act passes the House. That one was the one for regulatory framework for Bitcoin and digital assets. And that's moved on to the Senate. And when I say this one, the House passes the Genius Act. That's the stablecoin one. But that one actually did pass the Senate already. I think I hadn't updated it, but I'm pretty sure it did. And so Clarity Act could come next, but just huge shift in the regulatory framework and like both clarity and just like friendliness to all of this stuff. And it makes perfect sense that the stablecoin went through quicker than anything else. And okay, so those are kind of the bullet points. There's some stuff that, mining. Norway's banned some mining because like, oh, you're stealing electricity from other stuff. French lawmakers actually are doing a mining experiment to monetize surplus electricity. So they're going the opposite route, which is kind of funny. And Nice Hash is doing KYC now. Okay. Yeah, whatever. Go figure. But anything on the regulatory front or kind of the funny thing about US not having as many Bitcoin as they said, or anything like that? Because this is the one that I really want to get Steve's take on.
Do we know where the US government like has keys? Like, did they say like we have a custodian or we hold our own keys?
I didn't actually get that far into the FOIA stuff. So I think they actually detailed it, and there's an article on the Rage
Okay.
with screenshots and like addresses and stuff. So there might be details in there, but I don't know. I have to dig into it. BCC.
Okay.
Oh wait, no. I take that back. It's right here. Managed by Coinbase Prime. So
Yeah,
it looks like they're using
Okay,
Coinbase.
so they don't have any
Yeah.
coins anyway. All right.
They don't have any coins.
Dude, this is really like a conversation I had with like a billionaire a little while ago, which was like he said none of these big, the BlackRocks and people like that look at Coinbase like a complete joke, and a lot of what they do is like they're trying to get proper custodians that are
Yeah, I
like
hope so.
genuine companies that they don't think are a joke, that sell meme coins and stuff like that. So if the US government doesn't care though, and they're just storing their Bitcoins with Coinbase, that tells me something, because he told me that like BlackRock and these Vanguard and companies like that, they would never custody with jokes like Coinbase. So
Yeah. Well, the government outsources to everything. There's no technical savvy people in the government, so it's like I don't think it's possible for the government to own Bitcoin, to be honest. Because what does that even mean? The president has a key? No, I mean they're gonna outsource it. So
yeah, I mean, government's an abstract entity. It's not it doesn't exist in any sort of real sense, but neither does money. So
Wouldn't government
Yeah.
agencies and people have like some sort of HSM system, like for cryptographic keys, necessarily for like encryption and stuff? Like, wouldn't the president have like an HSM for?
they have nuclear
Yeah.
codes. They should be
Yeah.
able to have Bitcoins as well. Like
It would seem like you could get
Right.
them to modify that so it's a multi-sig,
There
and
you
people
go.
could kind of get
Yeah.
like you'd have to get them to adopt it within the system that they already have. I'm sure,
Yeah.
but there's got to be somebody.
it'd have to be at that nuclear
Yeah.
codes level.
Yeah.
And that's going to be a long time for it.
It'd have to be a real treasury, like this is our
Yeah.
treasury,
I just had a nice thought. If you're on a real Bitcoin standard and the government has a bunch of Bitcoin and you decide to steal from the government as some sort of like middle employee and you figure out how to do it, that'd be a lot of fun, right? Because you could be like, if I steal all the Bitcoins and they come after me, they won't have any money to come after me. like we're going to arrest you with what? Like, wait, it's like that Rick and Morty episode where like, it's that Rick and Morty one where they're like, someone stole
I'm
all
the
the
sovereign now.
yeah. Like
I'm the
I'll go
government.
and arrest them
You're the
for money. Oh, that'd be so fun, wouldn't it? Just bankrupt the government, and then the people that would throw you in jail over it now don't have the resources to be able to do it. That would be fun.
You pay the armies now.
The armies are mine. I pay your salary.
This
All
is- yeah, I don't know.
We should make a movie about it. So quantum. So Steve had a really interesting thread about like the quantum speed up and the whether or not it would be exponential or not. And it just so happened that there's actually, and one that I hadn't yet added to this one, but there was a quote unquote quantum speed up that was proven with one of them was called the recommendation problem. And so a quantum computer figured out and a supposedly only quantum algorithm for like the larger group that you have of let's say Netflix or whatever is I watch a movie and I like it, and then I watch another movie and like it, and then you watch one of those movies and you like that one. Like, what's the likelihood of you liking the other one that I liked? And this ends up being just a staggering data set when you pull all this together. And it's like, the scaling is terrible. Like the scaling of like trying to figure out those connections is like an exponential problem. And so it's been seen for a long time is this something that quantum could actually do because of how quantum works. However, one of the news items on it was that a guy named somebody Tang, who was actually 18 years old and graduating college because he skipped 4th through 6th grade, was actually, as his thesis, he was tasked with can you basically like create a proof, or because like one of his major interests was quantum, that this can't be done with classical computers. And he kept working on it. And like, as the deadline was getting close, he basically told his professors, like, I actually think it can be done with classical computers. And then he figured out, and it was actually he kind of took from the way that the guys with the quantum who actually figured it out, he actually figured out a way to create an algorithm that scaled logarithmically, which means that, like if it takes 1 unit of energy for 1, then it takes 2 units of energy for 3 units of energy for 9, 4 units of energy for 27, 5 for 81, whatever. So it scaled logarithmically, which means that now you can solve this problem, an order of magnitude better with classical computers, and you don't need a quantum computer.
And this is what, for mining?
No, this was for the recommendation problem. This was one of the only things that we've ever really seen that say quantum computers are better than traditional computers at this.
They're not. They're theoretically
We
better.
actually did it. Yeah.
A quantum computer has never been better at anything.
This is the thing that you're going to love. This is the thing that you're going to love.
But no, just quick what you said. Well, we have no thing even that quantum computers are currently better at.
I guess they proved in theory that it could be better than.
Right, on a paper, but
yes,
a quantum computer has not actually done that. A quantum computer has not factored the number 21.
Yes,
quantum computers are millions of light years away from doing anything practical. They are not currently better at anything.
This is why I'm so happy that you're here. Okay, so researchers successfully break a 5-bit elliptic curve cryptographic key using IBM's 133 qubit quantum computer. So 133 qubit, I had heard from multiple people that Bitcoin has to worry when we get to like 1,000 qubits. And like, I get that this is supposed to be like, this relationship is somehow like pseudo exponential, I guess, in how many qubits you have and like what you can do with it. They said it was 67,000 layers deep, and I don't know. The best I can come up with is for what that means is that it just means that the quantum computer is extremely complex. Like it's just a really big thing, but it's a 5-bit key, and it took them 16,384 shots in order to build the reference table to figure out what the correct key was in the key space. And they successfully did this, and they figured out what the key was. Now, does anybody off the top of their head?
Probably with knowledge of the private key ahead of time.
No, they said they specifically did not.
Oh, they said. Oh,
they specifically,
okay. So
they specifically did not put in the private key prior to the actual doing it.
Okay.
They ran the space. But does anybody off the top of their head?
I'm sure none of their error correction that they did at all had anything to do with little nudges here and there based on the fact that they knew the private key.
Let's assume they're completely right. Let's assume they're completely right. Does anybody know what a 5-bit key?
Good idea.
How big a 5-bit key is?
It's tiny. It's 5 bits.
32.
Yeah.
32 possible answers.
Yeah.
They ran 16,384 samplings to get the data set necessary to pick out the number was 7. And you could have just tried 32 different options and figured it out with a classical computer. So,
and that's even if you trust that they really didn't use knowledge of the private key. Like that's a lot of trust right there, especially for a corporation that wants to make a big research report.
Yeah.
Yeah,
true.
I'm jaded, about this stuff, and I think the one where I had to eat my own hat was AI, where I'm just like, all right, this is actually really messed up. Like this is going to change a lot of things, AI. And the one I'm still being like, this is a joke, is quantum computers. I still think they're a joke. I'm glad Steve agrees with me because he's an actual physicist. But AI definitely like slapped me across the face where I'm like, yeah, all right, this is actually going to disrupt a lot of things and has some horrible implications. And I'm not going to be able to just be like, it's bullshit. Like there's another blockchain crypto thing.
Yeah, the reason that AI is blowing people's minds is the same reason that the iPhone's blowing people's minds, which is because it's based on digital computing. Like the rise in AI is a direct function of the rise of the number of nodes that they have in their deep learning algorithms, which is a direct rise of the number of processors and Moore's law and all that stuff like this. Everything in our world is a function of Moore's law applying to digital computing. But like I've been studying my whole life, like different forms of of computing. Like for a long time, I was trying to make a climate simulator out of a completely different form of computing called stochastic computing, which works differently. And if you go back in the 60s and 70s, back when artificial intelligence meant something very like kind of more foundational, you saw hundreds of different types of computing devices other than digital computing that were trying to get going. Only one form of computing, digital computing, emerged out of that environment of millions of different computing things, including quantum computing, magnetic resonant computing, electronic heat computing, wave acoustic computing. Like there's billions of forms of computing out there. Only one of them has experienced Moore's law, and that's why we live in the world that we live in today. Like quantum computing has been around for 50 years, and it's one of hundreds of forms of computing that has been tried, and there's been no evidence that any of these forms of computing can overcome the error correction and power stuff that's required to achieve Moore's law like digital computing did. So it's just like, sure, like maybe we'll have some different computing revolution someday. Maybe it'll be quantum. Maybe it'll be something nobody's ever heard of before. But people act like quantum computing is the only other form of computing. Like there's hundreds of other forms of computing, and they've all had the exact same problems. And quantum computing hasn't shown any evidence to be any different than any of the other ones.
That's a interesting context. I didn't know about. I always just thought you have classical and you have quantum. I didn't know there were other paradigms out there.
I mean, there's analog, there's mechanical computing. Like think about all those people trying to make all those gears and all those devices, and like if they could have gotten that stuff smaller,
They just don't exponentially scale.
Yeah, we could have mechanical computing. Is quantum computing a form of mechanical computing? I mean, kind of. It's like an analog form. It's talking about, superimposing waves on top of each other.
And here's one of the interesting things is that I'm pretty sure that a lot of the quote unquote speed ups, the things that they've done to make quantum computing better are actually with, like, as I understand it, virtual qubits, which are the ways that they're making the qubits, extending their qubits, are actually digital. That they're actually trying to take advantage, like they're trying to trick it by making it both of them, which means that they're getting this, what looks like this exponential advantage when they're just doing it with digital, which is the exponential advantage we always get. But then they're saying this is what we're doing with our quantum computers. So it's like, how do you distinguish if you're literally making virtual qubits alongside your qubits? How do we know that your growth or the speed of like, oh, we had a 5 qubit computer last year, and this year we have a 15 qubit computer. Like, how do we really know that this is because your quantum is scaling exponentially, exactly like digital computers are, when it seems like you're leveraging digital computers to kind of pump the numbers. You know what I mean? So I don't know, but yeah, that was a really interesting take, and it definitely has me thinking about it differently. And I'm not
the problem is
dismissing it outright.
This is going to be like, how annoying the climate change problem is, and how annoying the Craig Wright problem was when everyone was just like, look, just sign a key, Craig Wright. This can all go away if you just sign a key. This is exactly what the quantum computing thing is going to be for the next 50 years. Like they're going to manage to scare people and make news for 50 years without signing a key. Yeah. Like this is going to suck, but they are never going to sign a key, and we're going to stay in a state of fear about it. It's just the worst.
I kind of feel the same way about the doomsday predictions about AI too, though. Is it like, I don't know. Maybe it's my ignorance, but I don't see how we're going to get this like super intelligent thing when, I don't know, all the AIs and tools that I'm using clearly like are pulling from imperfect data, and they screw up all the time. And so it seems like the best you're going to get is some sort of, unless there's something I don't understand, is going to be some sort of leap over everything. It seems like the best you're going to get is like, I mean, it is very revolutionary, but the best you're going to get is like specialized tools that allow you to do certain things very, very well, which is great. So like, and then I mean, I guess you can have agents that like combine all of those things, but I don't see how that's not just a very useful tool for individuals that give you access to things that you couldn't otherwise do on your own.
Yeah, it's very useful as an assistant. Like AIs will save time, and that's great.
Yeah.
But the problem is that applies to law enforcement. That is the main issue: is that they can just
The surveillance.
they can just scan everything and just like I come from London. It has like more CCTV cameras per human than any other country in the world,
Right.
and it's like the thing is, when you're dealing with humans, there's bendable things. It's like, look, yeah, I know I was going over the speed limit, like whatever. Like a human cop can deal with stuff like that. Like AIs just won't. That's the problem. They just and suddenly you have to contort yourself to operate in a system that, like, I don't want to live in that kind of world.
If you get automatic drone enforcers, like, coming to attack you because you said the wrong thing, did some sort of hate speech online or whatever. Yeah, that's awful and evil.
Dude, there's that dude in Belgium, right, who's going down for years in jail because he liked a racist meme in a WhatsApp group. And it wasn't that the meme was racist. It was that the AI said it was racist and there is no mechanism to contest it. So when he was in court complaining to the judge and said, look at this meme. Do you really think this meme is racist? And there is no way for if the AI says it's racist, then it's racist. So the point is then we have to start speaking in a way that won't flag stuff. And it means we just have to become unhuman about everything. I mean, it's Belgium. Who cares? But like the problem was like, but this guy's genuinely going to jail over it. Like he's
so wild. It's so wild.
And then there's the most insane part of the law in Belgium. I mean, this isn't AI anymore, but it was just if you're in group chats with people that have got found doing racist stuff, then you're liable for that, even if you didn't share it.
Dude, I should not hang out with you people. Good Lord.
Yeah, I know.
I have ruined myself.
Those kind of laws, like that, just makes me want to be racist. Like I don't know, like I think the only solution to that is to just say the most racist things possible.
Well, look, man, how can several billion people all be wrong? I don't.
Yeah.
It's just absolutely insane.
It's not really about being racist to any particular thing, but obviously racism works because everybody's racist. Everybody's racist to somebody, right?
Well, I just like China is the home of surveillance state, ridiculous autocracy and all that stuff. But it's like the most racist culture you could ever possibly imagine. Like they're systemic. They are actually systemically racist, like against whoever, like the Uyghurs.
Everybody.
Like they have stuff like you're obliged to be hostile to this group of people, like Uyghurs. Like that's a thing. So. Like if you're not racist, it's a problem kind of thing in that culture. But I mean, I don't know, man. I just that terrifies me. I really, really hate the integration of AI with any sort of regulatory stuff or like, it's
that is terrifying.
Because it's
this
so
actually
efficient.
brings us back to our earlier conversation as to where decentralization is necessary, and like it's about decentralization in the rules. Decentralization in the organizing protocols of our systems, because what that problem is the fact that our legal structure, like literally the law that determines who owns what and whether or not you committed a crime, has no objectivity. It has it's you plug that thing into AI and now the rule is like, well, do you listen to the AI? The AI says the thing, and then if that's the determination, well, then that's the category that it falls under, and now we have to execute one way or the other based on it obviously being under this category. And it's like, well, what? No, like what happened to common sense? Like you've fundamentally broken the underlying protocol of the thing. And because you don't actually have a foundation to stand on, it can be so easily corrupted by just a mistake, by just noise in the system.
But I mean, the government already works that way.
No,
like,
I know.
no,
That's what I'm saying. As like government is a broken centralized protocol. Necessarily, that's exactly why Bitcoin is such such a revolutionary breakthrough is that it takes one of the most
Right.
important protocols of our governing systems and it decentralizes it. But there will still be plenty of layers on top of it, the jurisdictional and regulatory and all of these things. Granted, if you cut the money out of it, they actually have a lot less power, but they will still have power and they will still enforce things crappily and they will still use AI in horrible, horrible ways. We just hope that removing the ease of capital access and their ability to defraud the money will actually cut down a ton on the scale of the damage that they can do.
I hope it works, man. My dad always says any guy in a uniform can waste your time, and just dealing with bureaucracy as enforced by a computer to me just sounds like
sounds horrifying.
It's awful. Like, I mean, my girl had a Facebook account deleted, and she had to try and someone made a fake account of hers, and and when she reported that account, somehow something got confused in their own structure, or I don't.
Here's a fake account of it. If somebody's a spoof account, this copying me, and they delete you.
Yeah.
They like the fake account's real.
Yeah, well, that happened, but the problem is all the support stuff is all AI. Like, I mean, some of that's actual Indians, which is, I don't know if you've seen the meme, like AI stands for actually Indians, because it's just like, like a bunch of guys in Bangalore that have been hired to do this stuff. But no, but most of it is just AI. Like, AI said your account, it meant, because she's talking about Bitcoin on there and stuff. So they're like, oh, it's a scam. So they just delete the account. And she's like, well, no, it's real. And you're just explaining it to. Half the time, it's just the actual human you get is lower down in the hierarchy than the AI that said your account was bad for some reason. And trying to get the human to go to the next level of human that's higher than the AI level of authority is really, really difficult with a company like Meta. You're just dealing with automated responses half the time. And if you can get through to a human, they're below in the hierarchy.
They don't even have the authority to do anything.
Yeah, and human laziness, it's going to kick in, and it's just going to be, oh, look, man, that mean computer says no. The computer said no, and I don't outrank the computer. It outranks me. So anyway, I genuinely have to go. I can't push it anymore.
Dude, all right. Dude, Mechanic, thank you for staying, even though you're pressed on time. Thank you guys for all getting together. Any last words for anybody? Steve, anything you want to bring up? Jeff? Mechanic first, I guess, since you got to peace out.
2106 problem, guys. Bitcoin ends in 2106. Start working on this sooner rather than later.
Yeah, ignore the quantum FUD. Ignore people trying to soft fork in quantum resistant stuff now. That's premature and not it's the that XKCD where it's how worried should you be about a health issue versus are you in a movie or not? And nosebleeds is the one where it's if you're not in a movie, a nosebleed is the least worrying thing ever. If you are in a movie and you get a nosebleed, you're about to die. That's some sort of so quantum computers for me, for Bitcoin threat models, is in the media, the quantum computing threat is the scariest thing ever because it ruins Bitcoin in 5 minutes. In reality, it's more just some idiot dev pushing through some change that no one pays attention to that shouldn't do any harm and actually undermines a lot of stuff, which is much more boring and no one's going to talk about it. So don't
much
worry
less
about
exciting.
computers. Yeah.
I've got one last result that just a result I just did while we were on this podcast. On all weekday, every day in Bitcoin history compiled for Monday, Tuesday, Wednesday through Sunday, just to see how much value is transferred on which day. Tuesday, highest possible day, is about 35 to 40% more than Sunday.
Wow.
Saturday and Sunday are significantly less than the weekdays.
Dead days.
I love these things. The week is not a part of the Bitcoin system, but a blockchain archaeologist will look back and be like, 2 days out of every 7, for some reason, humans seem to do different things on those days.
I'm telling you, man, the blockchain is going to be the best record of human economic behavior. I'm sure Visa knows all this stuff, but Visa, private network. I mean, There's going to be like tree rings. It's going to be like,
And you can't just like go dig through Visa and like
yeah, exactly.
go like look through information, but you can on Bitcoin.
Yeah.
Yeah,
This is
and
a
I
record
figure
of
out there was a religion
existence.
involved in it. I love it. So it'll be like, one of these days, it's like they had a god that they worshipped on this day, and that there was some book that told them not to engage in economic activity on that day as much
Dude,
as other days.
We don't have a
Like,
copy of the book, but we suspect it exists because of the
There's
blockchain
definitely a
activity.
Christmas signal. Something happened on December 25th.
we think that was when their god must have been born. But like, it's good. Oh, the blockchain archaeology is going to be the Great Pyramids.
love
man.
it, dude.
It's the
I
Great
love it.
Pyramids. We have to
It
figure
is,
out
man.
something was going on.
It is.
All right. We'll end it there. Thank you guys
All right.
so
See you
much.
guys.
Peace. See you. And that'll wrap us up. I hope you enjoyed that episode. That one was fun. Don't forget, Bitcoin's going to die in 2106 and we got to fix it. Let's get on this, people. Come on. Literally, the most important bug in Bitcoin. Don't forget to check out our amazing sponsors. Follow everybody in the show. Simple Steve is doing awesome stuff with UTX Oracle. Mechanic and their crew over at Ocean are doing awesome things with Datum and actually restoring Bitcoin mining. My brother is doing really awesome things about being very opinionated and sharing it very loudly. And of course, subscribe to Bitcoin Audible and hear more of Guy Swann and all of the best in Bitcoin made audible. Because how could you want to miss this? What's wrong with you? Check out Ledden.io for Bitcoin-backed loans. Don't sell your Bitcoin. Save on capital gains. And if you want to get serious about your light health, check out getchroma.co. I'm going to do the rest. I'm going to do the rest of this with my nightshades. It's not at all the time of day to wear these yet. 10% discount with code Bitcoin Audible. Don't forget to check out, like, literally save yourself hours and hours of scouring through the news if you're trying to figure out what's going around with the fight to freedom and the tools to protect that. The Financial Freedom Report, and then PubKey for a set of tools to fix the web built on the foundations of the things that already work in order to bring back sovereignty, ownership, and censorship resistance to the nature of the web. You will find links to all of this amazing stuff and all of these amazing people right down in the show notes. Follow, save it, you name it. It's going to be useful later. Trust me. Thank you guys so much for listening. This is Bitcoin Audible. Don't forget to subscribe. And until next time, that is my 2 cents.